present action taken to close the matters raised by the Auditor General, the Senate further resolved to issue a fine in line with the Parliamentary Powers and Privileges Act of 500,000 on the governor in his personal capacity for failure to appear before the committee via summons on the 30th of March 2026. The Senate also resolved to compel the governor of Nandi to appear before it to give an update on measures taken to implement the resolutions of the Senate. Clerk, can you confirm whether the fine of 500,000 has been paid?
Thank you, Chair. Yes, I can confirm that the fine of 500,000 has since been paid.
If that is the case, we can now proceed, and the governor can now take us through measures taken to resolve the issues raised by the Auditor General. We have 3 reports before us: the controller, the report on receiver of revenue, the report on the county revenue fund, and the report on the county executive. We will begin with the report on the county executive. Auditor General, you could give us the opinion and take us through the basis of that opinion.
Thank you, Chair. Report of the Auditor General on County Executive of Nandi for the year ended 30 June 2025. The opinion was qualified, and these are the basis for the qualification. 1. Inaccuracies of the financial statements. The statement of financial position reflects trade and other payables balance of Kenya shillings 782,535,628 as disclosed in Note 32 to the financial statements. However, cash generated from operations at Note 40 to the financial statements reflect increase in payables of Kenya shillings 504,314,597, resulting to an reconciled variance of Kenya shillings 278,221,031 Kenya shillings. In the circumstances, the accuracy and completeness of the financial statements could not be confirmed. Thank you, Chair. Thank you, Chair.
Governor, as is customary, you will take us to your written management responses. Perhaps guide us on which of the volumes contains your written responses.
Volume 1, Chair.
Okay, so you will read your response, and if there is need for explanation, that can be done later.
Honorable Chair, the amount of Kenya shilling 78,221,031 represents unreported trade payables as at 1st July 2024. This previously undisclosed opening balance will be appropriately recognized, adjusted, and disclosed in the financial statements of the subsequent financial year to ensure the accuracy, transparency, and the full compliance with applicable public sector accounting standards. Thank you, Chair.
Auditor General.
Thank you, Chair. The issue remains outstanding because we have not received journal vouchers correcting the misstatement, and we are yet to audit the financial statements of 2025-2026 financial year to confirm the action taken to correct this misstatement. Thank you, Chair.
Now, Governor, help us understand. These financial statements were done on 30th of June 2025. How can you have unreported trade payables of 1st July 2024? How does that arise? Maybe help us understand, because as at the closure of that financial year, you cannot be saying that there were unreported trade payables as at 1st July 2024.
Chair, I request that you allow me to request the CEC Finance to give that explanation.
Okay.
Through the Chair.
Thank you, Chair. As you can notice that 1st July of 2024 was the beginning of the financial year. So when you look at it critically, when we were casting this, we realized that as part of the tallying of the pending bills that were forwarded, this is an amount that ought to have been captured. So when we came to the end of the financial year, we noticed that the difference between what is in the statement of cash flow and the statement of financial position differs by this much, and we could attach a list of the pending bills that ought to be used to support this. So our discussion with the auditor is that to reflect a proper position of the payables, which is really the pending bills, we adjust it in the June 2026 financial statements, which is something we kept in view and we are currently capturing. Thank you.
This is not a simple JV or reconciliation matter, Governor. This is a matter of recognition of debt. And there's no way you can close a year, then decide that your debt of prior years, which was not reported, and then you bring it on board. We had an entity here, I think it was Wajir, which did the same thing, brought in 1.4 billion of debt that did not exist before. And there was no process, there was no methodology for its recognition. And I think, members, we dealt with that. So what assurance do we have that this 278 million is not manufactured debt? Because if it's not in the financial statement, and then it suddenly comes up, then there needs to be another process of recognizing it beyond just raising journal vouchers. Auditor General, can you give us an assurance, because that's your duty, that this 278 from where you sit, you can see it, and it is not manufactured, cooked debt?
Thank you, Chair. This amount, we cannot confirm whether relates to commitments by the county, because we have not seen the breakdown, and we needed to have this breakdown so that we could do in-depth audit of the transactions and confirm the accuracy and the validity of the payables. So we cannot confirm at the moment unless we see the schedule and we carry out in-depth audit of the balances. Thank you, Chair.
I thought, Chair, the CEC has said that that schedule is available and can show what this 278 million stands for. Is that what you indicated?
Yes, what I said, thank you, Chair, is that this reconciliation actually can be obtained because it relates to pending bills, and our figure of pending bills, the reason...
See. Yes, for us to be productive with time.
Okay.
The audit query says an unreconciled variance of 278 million. Even if the governor is not the numbers person, the numbers person should have provided that reconciliation. And then that would partially, satisfy the committee. Is there any reference to a reconciliation schedule? Any reference to an appendix? So that we know the 278 million, what is it made of? Are they trade payables? Are they staff payables? Are they KRA? Are they pensions? What are they? We have no visibility.
Thank you, Chair. This actually, we have a reconciliation. I'm just asking my team to extract through the governor. Largely, these are three main items. We have items that were not there initially from our pension funds and other payments or pending bills which were still being taken through a process of audit. So allow us to just retrieve that and share to this committee, Chair.
So there are even staff payables there?
These are all debts to the pension funds that were there, were historically there but had not been.
Of course, you break them down as staff payables, isn't
yes.
it?
Yes.
And if you go to note 32, staff payables is zero. Note 32. So how do we get the assurance that your financial statements present a true and fair picture of the enterprise, but particularly around debt? Around debt, because that's a significant matter. You can't say that all of a sudden you have just realized that you owed some people 278 million from 2024. I don't know, Governor, does this bother you? If the total stock of debt keeps changing every other financial year, is it a matter of concern?
Yes, it's a matter of concern, Chair. However, we know for a fact that, I think if you just allowed us to get the schedule, we can be able to get the schedule, because even pending bills, they normally go through processes. You know, sometimes you have some that have not been cleared, some that have been cleared. This pension, the outstanding pension payments, you know, we get updated by the various pension firms that we owe them money. So it's something that we should be able to have recognized, or provided the schedule. But as the CEC says, we can actually provide that. It's a matter of concern, yes, but we can be able to provide that.
Yeah, just remember it's a 1 year, because in your response you're talking of unreported trade payables as at 1st July 2024.
Yeah.
Yeah. So if you are not worried that you have debt older than 1 year which has not been recognized, then you have a serious problem when it comes to debt management. But let me allow my colleagues to put in the question, or does he want to provide the reconciliation now to guide further questions?
In the course of this, Chair, we'll be able to get that document.
Yeah, but remember the reconciliation was requested for by the Auditor General at the time of audit. At the time of audit. Remember, we adopted this report as is. And so the position of the Senate is that 278 million is unexplained debt. And I thought you'd use this opportunity to change that position. As things stand, we don't seem to have any explanation to the contrary.
Chair, just allow me so that maybe I'm clear, is that the correct position of our debt is 782 million, which is accurately captured in the trade and payables balance. The difference arises from when now you're moving to the actual cash flow, which means the cash outflows. The cash outflows in this case indicates 504 million as actual cash as an increase in terms of payables. So the difference, the reconciliation is between what you've shown in the cash flow and in the statement of financial position. But we've captured the trade payables position accurately. So that's...
No, you haven't. Note 40 and Note 32 must talk to each other, isn't it?
Sure.
So, can you tell us how the two are talking? One is 700, the other one is 500.
Okay, sure. Allow me just to retrieve
Oh,
the financial statement.
it's your clarity that we go to Note 40, which is what you're explaining, and Note 32, then they'll talk to each other. Can you demonstrate that? How the two are talking to each other?
Yeah, sure. Just let me just get the copy of the financial statements, Chair.
Chair, looking at, the true accurate position of an entity is in financial statement. The fact that, Governor, in note number 32 and number 40, you have not disclosed anything on employment payables, third-party payments, tax. So, Governor, it is hard in this financial year to pinpoint the exact amount of trade payables or even the pending bill as is known by the common street name. So this introduction of 278,221,031 was an afterthought because we cannot go outside the financial statements, and Governor, you are the owner of these financial statements. So if you don't disclose the true picture, which the OAG flagged and reported on, then it remains as is, it remains unresolved. And this could be possibility of a manufactured debt that is adding up and piling up to the trade payables or pending bill, which will affect, because you will have to budget to pay, which will affect the service delivery and development in Nandi County. So, Governor, if this 278 can be traced to somewhere, which your CC is saying, and which you didn't provide as per the Public Audit Act, what assurance are you giving us that? And I don't know, Chair, because the procedure of Parliament is you must table a schedule. I don't know how we'll rely it. This 278 remains as a variance and as manufactured as is, because it is like you are walking in the street and somebody tells you, you owe me 100,000. Then you say, okay, I owe you 100,000, let me add in my liabilities. So, Governor, what assurance are you giving us that this was not a manufactured amount, and where is the schedule? And if it is there, I thought the OAG should have seen that document, because, Chair, section, is it 34, 30, 32 and 35 Public Audit Act, it's an offense to deny during the audit period. And, Chair, all of us know that audit is a process, it's not an event. By the time from first meeting, management meeting, issues that have been flagged is there. And, Chair, maybe in conclusion, sorry for taking long, even, Governor, if you look at the prior year matters, in the previous financial year, this matter was also raised by the OAG. So, Governor, what is the assurity that this 278 million plus can be pinpointed to a particular debt or trade payables before the county entity? Chair, yield back.
Okay, I think it's the same question we've been asking consistently. We had given you an opportunity to relate Note 40 and Note 32 because you're using that as your defense. Please proceed.
Okay. Well, thank you, Chair, through the Governor. On page 35, Chair, of the financial statements, trade and other payables, as I said, we've correctly disclosed the 782,535,000 under trade and other payables. Note 32, that is page 72 of the financial statements, is the same figure, Chair, only that this hasn't still been disaggregated into the various components.
What figure is it?
782,535,000.
On page?
That is page 72. That is now Note 32.
No, Note 32 is okay. So go to Note 40.
So now you go to Note 40. This is what we call cash generated from operations. That is where the variance, Chair, arises, where we are showing the 504 million being increase in payables, which is what we said there is a reconciliation between what we've shown on the face of the financial statements and increase in the payables.
So you cannot say the financial statements are accurate because the 504 is a movement in payables for the year, isn't it?
It's a movement, yes.
So if it's a movement, if the two are to talk to each other, then you ought to have had some opening balance from prior year.
Yes, Chair.
So that the movement plus the opening balance then can account for the 782.
Yes, Chair, because you remember we adopted the accrual the first time, this time round. That's why when you look at
No. We have seen other counties disclosing opening balances.
Yes, you're right, Chair. We ought to have shown the previous pending bills, even when we're reporting in cash. But in this case, we did purely cash basis, and that is why the adjustment arises. And in what the Governor read is that...
that is not the explanation, CEC.
Yeah.
We might be fishermen and farmers here, but we have had 46 other counties here, and we have had the Auditor General. That cannot be your explanation. This is just, perhaps let's even find out who prepared these financial statements, because it is an element of professional negligence. I don't know how material that disclosure is, Auditor General. Is it, because in the past under cash, the one that is alluding to, pending bills were not brought into the financial statements. It was just a disclosure, isn't it? But now they are part of the financials. So is it a material misstatement if the opening balances or if the numbers are not flowing as raised by your query?
Thank you, Chair. The balance is material based on our threshold for that year. Thank you, Chair.
So it's a material disclosure?
Yes.
It's not a simple bookkeeping issue?
Correct, Chair.
Is Makto present, the head of financial reporting unit?
Yes.
Yeah. And is Priska Jepchirchir present? I can see there's an ISPAC number there. Priska Jepchirchir. So you are two members of the Institute of Certified Public Accountants of Kenya, and you have committed what I would call a very rudimentary professional error. But the question is whether it's an error or the entity is manufacturing pending bills. I think that was a question we were asking ourselves earlier, whether it's a professional error or it is an attempt to create debt without clear accountability. And Governor, if you would have provided even that schedule of 278, we would have said that that is a real debt that exists. But 278 cannot be an accounting error. I don't think if we made it an accounting error, it will be a slap on the wrist.
Chair, if you can allow us to, even as we continue proceeding with the session, to ask them to be able to retrieve, that should be able to suffice.
You'll soon realize how material that error is going to be on subsequent matters before us. Because he alluded to the fact that the 278 could contain pension contributions and staff payables. And so if we can't establish the facts on this first issue, there are about 3 or 4 issues that will not be able to properly resolve. Now, members, do we tie this to the other issues or we still?
Yeah, Chair, my proposal is we tie up with the long outstanding trade and other payables because it makes reference to note number 32 on the aging analysis and the issue of trade and other payables before you make a ruling in regard to 278,221,031.
Okay, I think that's fair because it's the same figure quoted, it's a 782 million.
Yes.
Yeah, so let's just deal with note 32 to its final conclusion. Auditor General, let's go to the specifics of trade and other payables. That should be number 5 under the opinion.
Thank you, Chair. Long outstanding trade and other payables. The statement of financial position reflects trade and other payables balance of Kenya shillings 782,535,628 Kenya shillings, as disclosed in note 32 to the financial statements. However, examination of the aging analysis revealed that a total of Kenya shillings 193,227,263 and Kenya shillings 145,328,500 Kenya shillings and Kenya shillings 108,858,915 had been outstanding for 1 to 2 years, 2 to 3 years, and over 3 years respectively, all totaling to Kenya shillings 447,408,678. In addition, records provided revealed that the balance was not supported with creditors' movement schedule. In the circumstances, the accuracy, existence, and completeness of the long outstanding trade and other payables balance of Kenya shillings 447,408,678 could not be confirmed. Thank you, Chair.
Okay, Governor, just point us to the page number where your response is.
Page number 4, Chair.
Okay, you may proceed.
The management response is that an agreement was entered with the controller of budget in relation to the payment of long-term payables. The county government is strictly adhering to the payment plan, and a good number of the said bills have since been paid, and a few outstanding bills will be cleared in due course. And there is attached is the creditors movement schedule and the payment plan, which is annex number 3.
Auditor General.
Next 3.
Thank you, Chair. The issue is still not addressed since there are no documents which have been provided to confirm payment of the amount and the balance as at to date. So the dates are still long outstanding.
Governor, you heard what the auditor said. What's your response before the senators put in the questions?
Chair, if you look at the Annex 3, we have a payment plan, and we are adhering to the payment plan as agreed with the controller.
Now, maybe let's just look at note 32, which has been referred to by the Auditor General. So note 32, already we're starting off with a problem because the 782 million does not tie with the movement in payables for the year under note 40. So already we have a problem. Secondly, Governor, if your movement in payables for the year was 500 million, shouldn't there be a relationship between that figure and debt under 1 year? Shouldn't there be a relationship, some casual relationship between those two figures?
Yes, Chair, just allow me to ask the CC to shed light on that.
Yes.
Thank you, Chair, through the Governor. Your first question, Chair, was the figure we're looking at here. This relates to a schedule we filed last with the Controller of Budget as at 31st of March 2026. The reported payables are as at 30th June, year end. That is why you may not see figure for figure tying the two schedules. Number two, your question is whether there's a relationship between what we are paying, what we're showing as paying, and the movement on the statement of cash flow. The answer is yes. When you look at that note, that Annex 3, you realize that the total development bills paid.
Annex 3, because I can't see it.
I think you got me. You didn't get me exactly. Maybe let me rephrase. I was not making reference to your annexure. I was making reference to Note 32 of the financial statement, because we are yet to internalize that annexure. I was asking for the relationship in the movements in payables under Note 40 and the schedule that you have here already. Of course, we had already discussed, and you have already. You are saying there's some 280 something million you're going to explain. But if your increase in payables for that year was 500 million, then shouldn't your debt under 1 year relate to that 500 million?
So, Chair, just refer me to where you're making reference to the debt under 1 year under the annex.
No. Note 32 of your financial statements, where you have said your debt under 1 year is 335 million.
Yes.
And then in the other, in Note 40, the increase in payables was 500 million. So I'm asking, should the two talk to each other again?
They should, Chair. Let me just highlight one problem where we do aging manually as opposed to an aging where we would actually be driving an aging analysis from a system. So when you're tallying, when you're doing this aging analysis, we're actually relying on manual compilation of the outstanding debts as opposed to something that a system would generate. And that problem for us has persisted for long, that we've decided that we really need to just set in place the system, and we have our technical guys doing a system that will be able to really give us figures that are accurate, as opposed to relying on manual, which is prone to a lot of errors and casting differences.
You know, you are cleverly defining a solution without owning up to the problem.
Yes, Chair. That on the disclosure note 32, yes, that figure ought to represent the 504, which is a change in the year. Thank you.
So now, you see, now when you look at that Note 32, Governor, that's why I was saying that that first issue was so material. It will determine whether we are able to make progress or not. Your officer has even said that the aging might not be as accurate as it ought to be. But if it was a few millions difference, that would be fair. The difference is almost between 500 million and 335 million. Secondly, employee payables. Can you tell us, as a matter of fact, that Nandi does not owe anything to employees, be it pensions, be it statutory deductions? I know in the prior year there was an issue of non-remittance of statutory deductions. Can you, Governor, having taken the oath, tell us, as a matter of fact, that the way you reported employee payables to be zero, that is the real situation? That you don't owe anything, even pensions, even defunct authorities, etc.
Well, that can't be true.
But
We definitely do.
But you have reported zero here. You see, we don't know anything. We can be blind. We can not know anything about Nandi. I don't know whether Senator Maruma has gone to Nandi. But by looking at your financial statements, we should be able to understand Nandi. Your financial statements are not giving us a proper picture of Nandi. And if ISPAC was here, we would have told them to go with their members for disciplinary proceedings. So how then will you pay that debt if it exists and it has not been brought into the financial statement?
Through the chair, through the governor, Chair, it is true that we have debt to employees. The latest being even a statement we got from the county pension fund and the other local authority. There are usually two. However, Chair, the reason we've not been able to disclose, and rather we've lumped everything under the 782, was we've had a reconciliation issue. It's been back and forth, but proper disclosure will require that once we are clear with what exactly is owed to KRA, what is owed to the pension fund, we break down that 782 million and not report it as a lump sum figure. Thank you, Chair.
Are you saying that because you're not able to reconcile, then you put the whole pending bills as trade payables? Why can't you disaggregate and have trade payables, maybe 500 million, and the rest as employee payables, even with that contested figure, other than lumping them together?
Thank you, Chair. On the face of the financial statements, it's under a line called trade and other payables. So the note might be a bit misleading, but on page 35, it is recorded as trade and other payables. So in a sense, it captures everything without necessarily committing to a figure that we are still in the process of reconciling. Thank you.
Chair, maybe
Senator
is the county running away from their own financial statements? Because if you look at note number 32, Governor, the segregation is provided, but you have negated everything, number one. But when you go to note number 9, you have disclosed your employee costs, which should have appear in employment payables. So the question, because Chair, the question is, looking at the Annex 3 of the Governor, he is indicating that the summary of pending bill status, as he says, as of this 2026, you have had recurrent bills paid. He has paid development bills paid is 397,659,81. In your own document, recurrent bills paid 160,446,817.25. The total, as per your next that you have paid, is 558,097,798. My question is, Chair, how sure are we with this credit movement schedule payment plan, which is a one paper without an attached schedule, to indicate the entities that have been paid, who are these, whether there is payment of multi-year projects that is ongoing, and on the recurrent bills being paid, does it resolve the aspect of unresolved prior year matters where this matter was disclosed? So, Governor, that would be my question 1. Question 2, Chair, even if you look at note 32 and note 32 and note 40, they are not speaking to each other. It's like Jesus Christ and the Satan. So my question is, this astronomical increase, Governor, now Chair, I don't know, maybe you'll guide me with this. This growth of year under 1 year in segregation and aging analysis is 335,126,950. So, Governor, which one should we take? Is it on note number 40 or 504,314,600? I don't know which number will work with Chair. I don't know, maybe you'll guide. So why that substantial growth within 1 year? Because, Chair, it can go back to the manufacture of 278 million that was manufactured in the first issue. Because this movement of pending bills, you know, this payment, there is an increment. And Governor, in your Annex 3, you have indicated that as of 2026, your pending bill is growing. It is now 993,223,845.95. So my question number 2, Governor, can you give us the nexus of this astronomical growth in the global view of the pending bill? And this year 1, because it's 48% as per the analysis, aging analysis chart that has been provided in note number 32, and also in note 40. And the growth, of course, of over 3 years, 2 to 3 years, 1 year. Give us the perspective, because we know pending bill is a very sensitive issue, Chair. You know, counties globally, the 47 counties, Chair, they owe our contractors, suppliers, and servicemen and women almost over 180 billion. So why this astronomical growth in the global pending bill that you have, or trade payables? And what is the nexus between note number 32 in the growth of 335 million and 5 or 4 million between note number 32 and number 40? So which one should we take it home, Chair? I yield back.
Thank you.
So that-
Senator Morum?
Yeah, so that maybe the governor can answer to both. I've looked at your Annex 3 and I've seen a letter to the Control of Budget dated 23rd October 2025. Please guide us how this payment plan would lead us to paying 782 million, because it's a paper that you need guidance for us to follow this document, that the one that you're referring to as payment plan forwarded to the Control of Budget. How would it guide us to how you will pay 782,535,628 from this plan? Please just guide us.
Okay, Governor?
Thank you. Through the Governor Chair, is that we filed this document to the Control of Budget as at 23rd October 2025. In filing, the advice that we have from the Control of Budget is that it is prudent to start paying from the oldest debts first, going to the newest. At this point, by the time we were talking of 23rd October, we had already, the pending bills had increased from the 782, which was as at end of the financial year, which was June, to 992 million, which was around the same October. So the filing was as at current period as that October. So when you see the schedule attached with the letter, it requires that we show per department what is owed. So you can see the 13 entities showing that in quarter one, this is the amount that we paid. Quarter two, this is the amount to be paid. So the 226 million was quarter one, all the way to quarter four for development, and also for recurrent, quarter one to quarter four. So the requirement is for both recurrent and development, you show different schedules. Every time before requisition, we then are required to confirm that we adhered to what we wrote and committed ourselves to, and that has always been the basis of the approval of the requisitions. So in essence, then the 992, the 782 is inside the 992 million. Thank you, Chair.
Sorry, Chair. Where did you get 992? I have 993. Or this is another document I'm having. The one you are having, the creditors movement.
You see, members, one thing we must agree on is that if the financial statements are not accurate, then we are not going to make any headway in this conversation. And there have been various admissions by the county of things that they ought to have done that they are going to do, things that they could have done if they had better technologies. And maybe to put it in context, because we also need to go to another issue which will demonstrate the same problem, is that this year, Governor, you had 7.813 billion in terms of receipts. And you have reported here 782 million as trade and other payables. Having looked at other counties, it's not bad, it's not alarming, because there was a county that was here with 4.5 billion as trade and other payables, because that's about 10% of your total receipts. However, we cannot vouch for the authenticity of that number, because as you have admitted, opening balances were not disclosed. As you have admitted, the aging is incorrect. As you have admitted, you did not disclose things like staff payables. It appears as if the county does not understand what it owes suppliers and staff. So I would have been very happy to congratulate you for having some of the lowest debt to revenue ratios. But we can't get there. We can't get there when your own team is the one that is poking holes into the numbers. So, members, I don't know whether you want us to ask questions on the basis of a note and a figure that the entity itself has discredited. Because you have discredited it. That's why you have said you're going to make adjustments in the next financial year. That's why you have said you need better technologies to age. So even if you ask you questions around aging, already you have admitted that you have done the wrong thing. So members, from that perspective, how do we prosecute this matter? Because you have incorrectly prepared financial statements.
Chair, and therefore, even the people who prepared financial statements before sign-off, they must have delegated their duty. Because if the governor is alluding to not owning up per se the financial statement, then it goes back to the people who've prepared. And I think this is what we call professional negligence that must be handled. So even as we look at the authenticity of the trade payables, the pending bills, so that Kenyans can understand easily, the people who prepared the financial statement committed a serious cardinal sin by not disclosing the true position. Because if we were not very keen, Governor, we would not have noted these discrepancies that we are noting with financial statements. So, Chair, I think even as we look at OAG looks, because I had also asked the Governor about the schedule of the payment of these 558,097,798 in attaching to show that movement or payment. And also the CC has said that they paid all the pending bills. So we can't see here. So it is hard even to know who was paid then, how much was owed. So, Chair, as you ordered the variance that we noted in 278 million plus, and on this one, the movement between not 32 and not 40. So also the people who prepared, Senator Kata is distracting me, there is Gusia here and Gusia there. I don't know whether they are related, the Ngusia, the OAG, and the Ngusia or Sergeant Atans. But the Chair, just in noting in your ruling, you must refer the people who prepared this financial statement to ISPAC. They must be held accountable for making what we call a year one accounting error. Chair, I yield back.
I think to avoid any fear or any perception that there could be mischief on the part of the Senate, I want us to contextualize the problem that Senator Chirarge is describing, again, by looking at how you handled deposits and prepayments. Because once we get that picture, we'll be able to take a view on whether these are financial statements that can be relied on. So, Auditor General.
Chair, before we go there, just one short observation.
Yes.
And this could also be to the auditor and the entity. When we are aging, I'm very uncomfortable with this type of aging. You know, the aging analysis. Trade and other payables under 1 year, then 1 to 2 years, then to 2 to 3 years. I've always been uncomfortable as a student of mathematics. I think maybe moving forward, we might want to just write in terms of months. So when you're aging, we say under 12 months. And then the next row would be maybe 13 months to 24 months. And then the other column would be 25 months maybe to 36 months. Because if you say 1 to 2 years in one row, then 2 to 3 years, how do you then disaggregate the 2 years up here and 2 years down here? You know, so that you can get the figures. I've always had a problem of this type of aging analysis. Maybe we need to change and start using months. Below 12 months, maybe 12 months to 24 months. Then the next one will be 25 months to 36 months. Then maybe over 36 months. Otherwise, this type of stuff, even for mathematics students, this is just wrong. I thought I should make that observation.
Yeah, Auditor, you can always guide the entity, and maybe this should come from National Treasury, really, because they're the ones who issue the, the standards and templates, guidance on aging, so that it is factual. And then I take note of what the CEC was saying, that they are aging manually. I don't know what you mean by aging manually, but I believe this is something that even on Excel can do this. Excel can get you a proper aging, unless you are sitting under a tree and distributing the papers in some grids drawn on the. I don't think that would be happening in Nandi. So there's a problem. There's a problem here, as explained by Senator Maruma. National Treasury offer the right guidance, and then Auditor General ensure that they do as required by the National Treasury.
Thank you, Honorable Chair. The Public Sector Accounting Standard Board is the one that's prescribed how these entries should be treated in the financial statements. And therefore, I would urge the county to adhere to that template, because it is very clear. Like now, for example, the opening balances, they were directed to have the opening balances as at 1st July 2024. To pick the balances they closed the year with in June 2024 and carry them as the opening balances for that year. So you can see the template is blank. There is nothing that is put there. So I would urge the county to adhere to the template, and they will be able to minimize all these errors. Thank you, Chair.
Okay, that was an observation on the aging practice. Members, I want us to look at the next matter, which is explained in note 33, so that we can take a view on the accuracy of these financial statements. And you'll still be free to ask questions that cross-cut from note 32 to note 33. Auditor General.
Thank you, Chair. I seek your guidance. Which paragraph, Chair?
The deposits and retentions.
Okay. Thank you, Chair. Unsupported fundable deposits and prepayments. The statement of financial position reflects nil balance in respect of refundable deposits and prepayments as disclosed in note 33 to the financial statements. However, the supporting schedule reflects Kenya shillings 62,967,157.59 Kenya shillings, resulting in an reconciled variance of Kenya shillings 62,967,159 Kenya shillings. In addition, it was revealed that the county executive operated deposits and retention bank account at the Central Bank of Kenya with nil balance as disclosed in note 21 to the financial statements. The account was intended to hold deposit monies for payment to various suppliers and contractors. However, the cash book and bank reconciliation statements for the account were not provided for audit verification. In the circumstances, the accuracy, completeness, and validity of the nil deposits and retentions balance reported in the financial statements could not be confirmed. Thank you, Chair.
Governor.
Chair, the nil balances arise from the fact that a significant portion of the retention monies was reported as part of the closing balances in the county revenue fund. A prior year adjustment will be undertaken to rectify this position, and appropriate measures have been instituted to ensure that the matter is accurately addressed going forward. Thank you, Chair.
Auditor General.
Thank you, Chair. The issue is still not addressed. The action proposed by management will be confirmed in the audit of the 2025-2026 financial statements. And the misstatement remains as it was as at 30th June 2025. Thank you, Chair.
Governor, we have the report of the county revenue fund here. Can you show us where that 62 million is accounted for? Yes, proceed.
Thank you, Chair. Through the Governor, is that this, as the explanation goes, is that we've not been, we've been leaving the retention money as part of the CRF balances, but you will not find it broken
take
down.
us to this is a CRF.
Yes.
This is a CRF, because today's meeting was to look at the three.
Yes.
So you have made reference to the CRF, and you are saying a significant portion of the retention monies was reported as part of the closing balances in the CRF account. This is a CRF report. Demonstrate to us where the 62 million is.
Yes, Chair. I'd wish to just make an explanation through the governor on that.
Just make reference to the CRF, because the response makes reference to the CRF, so that we are dealing with facts. The governor said it was reported in the CRF. If we find it in the CRF, well and good. We go to the next question.
Thank you, Chair. It's reported in the CRF, but not as a standalone figure of retentions. We've not separated in the CRF.
Where, in which line, on which page is it included?
So basically, Chair, any money that has gone through the CRF would then mean that it will be translated and paid to suppliers. Any balance that is in the CRF would include the retentions that really will be transmitted.
Okay, what is that global balance that includes the 62? You see, Governor, I think you must be concerned. It appears as if someone wrote for you this response. Of course, you'd rely on your technical people to do this response, which I understand. But they must also write responses that make sense. If you tell us the money was accounted for in the County Revenue Fund, this is a statement of the County Revenue Fund. Just show the governor so that the governor can show us where the 62 million is. Because in the report of the Auditor General, the Auditor General says you retained 62 million, but there was zero in the account, which means the 62 million was stolen. But if there is another explanation, show us.
Okay, Chair. So this has been the trend of activity. Initially, we used to maintain a retention account with the commercial bank. Courtesy of the advice from the Auditor General, it was advised that that has to be maintained with CBK. So we closed the retention account at the commercial bank, paid out all the retention monies. We opened a CBK special purpose account for purposes of retaining and transferring the money. The practice has been, since we opened, what ought to happen is that as we pay the supplier, we then transfer the retention money to the retention account. But we've had a mapping issue. So effectively, for the suppliers that we've been able to retain, we've only paid them 90%. 10% still remains unpaid. As soon as then we're able to fix the mapping, from our balances, what we receive from Exchequer, we'll still have to earmark and put it aside and transfer the whole amount, including the arrears, to that retention account so that we're able to pay.
I'm sorry, Governor. This committee is driven by facts. If there's a fact in the CRF, please point it out. If it's not there, then let's go to note 33. Because I thought we'd get some salvation there, but let's go to note 33. So, Governor, what have you reported as customer deposits, prepayments, and total deposits in your financial statements?
Zero.
Customer deposits?
Is not in. It's
Payments?
Nil.
Other deposits?
Nil.
Total deposits?
Nil.
Yet the Auditor General finds that there's 62 million that ought to be retained for suppliers. So where did the money go to if it was not reported?
Chair, and in addition, retention money is contractors' money. It is their money. So if it is not there, it was probably stolen or misappropriated. Because even looking at, Governor, in addition to what you have asked, even looking at note number 21 and 21A on detail, even on special purpose account that the CCM Governor is alluding to, does not add up. And I thought OAG, the retention and deposits account should maintain on its own because it is the contractor's money. Can I take retention money and give it to the employee cost as per the law? Then the procedure of reallocation under the PMF Act, Chair, even if the governor was to tell us he reallocated, then there must be legal procedure of that movement. So this 62 million, even if you look at note number 21, 21A, and you look at note number 33, which has reflected zero, this money cannot be traced, Chair. This 62 million, unless whoever prepared, even I've looked at the CRF account financial statements that the governor is trying to allude in, it is not traceable. Because even if it was in a global figure, it should have been reflected in the CRF document or the statement of the OAG. So, Chair, I think looking at all these, since there is no movement, and you know they say numbers don't lie, other things can lie, it is hard to trace where this retention money of 62 million is. And it points back to the initial disclosure of financial statements.
Okay, I want to hear from the National Treasury because they've given us guidance on this matter in the past.
Thank you, Honorable Chair. Probably I begin by educating how the deposit money is handled. Because at the point of pay, the contractor or the supplier they are entitled to that deposit, probably the way it was defined in the contract.
Make no sense, then I think we are taking the Senate casual.
Chair, through the governor, is that whereas in the past we've not been able to make these retentions because of the cash flow issues we've said, our undertaking is that now that we have the retention account, beyond the 62 million, we'll be able then to compute all the amounts that are due for retention in terms of, because we only retain for contracts above 5 million, then we're able to file and make a provision in the budget so that the entire amount is swept, because the position is that we only paid out 90%, the other 10% went into other payments, as it were, in terms of it is money in the account, so you end up paying next contractor, you pay an extra contractor instead of.
So you have not even demonstrated a single contractor who has been paid the 90%. Paying 90% is not a problem. Our concern is that money ring-fenced for its intended purpose. And ring-fencing it means that you've got a certificate from the bank that the 62 million is in there. Whether you pay 90% is neither here nor there, because you can hold that money for 3 years. There's nothing wrong. It's a supplier who should file, isn't it? If the contractor does not file, then you can't pay. So that's not our problem. Whether you paid 90% or 80% or whether you've paid nothing, that's a different problem. Here you have deducted, but the money cannot be traced. That is a problem that we need to address ourselves to. And traceability of the money.
And in Chair, we're dealing with 24-25 financial year. So most of the contractors have completed their defect liability period. So are you paying them after the lapse of that period? From which budget are you paying them in the 25-26 financial year?
Well, thank you. Through the governor, is that, well, we are lucky that most of our projects are really small projects, 2 million, 4 million, 3 million, which we don't retain. So oftentimes that is 100%. The few projects that then go above or the amount at which we retain, especially the flagship projects, you find they're either still ongoing, or the few that are complete is where now on need basis, or as and when the contractor files the claim, we're now able to now look around and try and get the money. So,
and which are they? Which are those?
The projects?
Because there's no register even for retentions here.
Well, we have that, Chair, we could provide. An example is we did our hospital. The contractor has now filed with us retention.
Do you know the contractors you owe retention? Do you know that?
Yes, we know.
Do you know them?
Yes. We have a list of...
Where is that schedule?
We don't have the list of the retention here because it was...
Because that was one way of solving this matter.
Yeah.
To demonstrate that, yes, you know the people you owe 62 million. Yeah. So even if their money is in CRF, but you know. But you have come with nothing.
Actually, Chair, my reading of this query is that the auditors found from that supporting schedule of 62 million for the people who are owed the deposits. But then the money is not there. I think that schedule must be there. It's there.
Yes, Chair, the schedule is there. We know who owes us. It's only the money.
So how do we conclude about the money? The 62 million? Because if it's in CRF, then it means it will be subjected to another budget cycle, and yet the money had already been approved for release.
And maybe, Chair, I'm trying to get the explanation of CCM. It already says there is an established account. towards the end of financial year 24-25. And the issue of cash flows is not an issue. The point I'm trying to make is that we have agreed that this money was budgeted, approved, and released by the COB. So the question, the fact that they can pay does not mean where these 62 million are in cash. And I've seen in note number 21A in your financial statements on executive governance, I cannot see, I have seen you have a number of accounts that you have opened with Central Bank or CBK, but it's not indicative of where 62 million is. Chair, to me, this money cannot be traced. Because long and short, and the chief officer of finance and the one on the retention and deposit register, which I don't know, OAG, did you see the retention and deposits register in the course of your audit anywhere through the chair? Sorry. Through the chair.
OAG.
Thank you, Chair. The amount in this query, number 2, was based on extracts from payments that were made towards the end of the financial year, before the expiry of the defects liability period. So this amount is based on the payments, not a specific schedule prepared by the county. Thank you, Chair.
Now, members, we probably need to make progress and go into the other significant matters that have been raised there, but we need to get out of this issue of inaccuracies of the financial statements. And Governor, I think this long conversation has indicated that on the face of it, your financial statements are inaccurate. They do not provide a true and fair picture of the organization. We have looked at trade payables. We have seen that there was a significant non-disclosure of opening balances, 278 million by your own account. But you have further put it on record that you are aging, you accept that it might not be accurate due to the manual nature of your computations. You have failed to disclose staff payables. You have failed to disclose your deposits, prepayments, and retentions. You have failed to provide the bank certificates to show where the 62 million is. There is serious inaccuracies, there's serious misstatement of your financial statements. The CPAs who prepared these financial statements, CPA Mark Toll and CPA Priska Jepchirchir, is there any reason why we should not refer you to the professional body for disciplinary action for the inaccuracies and misstatements that have been confirmed in these financial statements? I think if they're in the room, they should, before we give them the opportunity to explain themselves, before we make that conclusion. That's on the professional negligence. Of course, there'll be other conclusions on the numbers.
Chair, so as you rule, I thought you, as the two lady and gentlemen explained their position, this inconsistency has created us not clarity on variation of 278 million. The initial one, the clarity on the pending bills, that is loan outstanding, trade and payables, that the governor was trying to explain of 782,535,628 shillings, and also now 62 million that was supposed to be meant for retention and deposits, 967,159. Chair, cumulatively, this one comes close to 1 billion plus. So you might also want to rule on that issue of that variance, that the materiality and the net effect, in as much as the inaccuracies of financial statements. Chair, I yield back.
Okay, let's dispense the professional responsibility, because we sometimes want to fry the governor, who is an advocate, I believe, in good standing on financial reporting issues, which are done by experts who are members of a profession. So the two CPAs, are they in the room? CPA To and CPA Jepchirchir? Yes? You have followed the conversation, you prepared this financial statement, It contains significant inaccuracies, significant misstatements. Why should we not report you to the professional body for sanction? Why should we not make a conclusion that you are unfit to hold public office? Because that is an option that is available to us under the Public Audit Act. We do not want to condemn you unheard. That's CPA Toe. Yeah, proceed.
Thank you very much, Honorable Chair, through the Governor. Usually, when there is an error in the financial statement, preparation of the financial statement, the law allows a time frame for the amendment. And now we have indicated that in this year, the financial year 25-26 financial statement will make adjustment in regard to the 278 million, which was omitted at the beginning of the year.
Is it your view that those are material misstatements and material inaccuracies?
Yes, they are material, sir.
Yeah, because what you're saying casually is for things that are not material. If you make a material misstatement and then you go ahead and sign that the financial statements present a true and fair view of the enterprise, then what you're saying cannot be of use. So if that's all you've got to say, it's okay. We will ask ISPAC to look at the matter. CPA Jepchirchir. Of course, there'll be other conclusions on the numbers.
Chair, so as you rule, I thought you, as the two lady and gentlemen explained their position, this inconsistency has created us not clarity on variation of 278 million. The initial one, the clarity on the pending bills, that is loan outstanding trade and payables, that the governor was trying to explain of 782,535,628 shillings, and also now 62 million that was supposed to be meant for retention and deposits, 967,159. Chair, cumulatively, this one comes close to 1 billion plus. So you might also want to rule on that issue of that variance, that the materiality and the net effect, in as much as the inaccuracies of financial statements. Chair, I yield back.
Okay, let's dispense the professional responsibility, because we sometimes want to fry the governor, who is an advocate, I believe, in good standing, on financial reporting issues, which are done by experts who are members of a profession. So the two CPAs, are they in the room? CPA Toe and CPA Jepchirchir? Yes? You have followed the conversation, you prepared this financial statement, it contains significant inaccuracies, significant misstatements. Why should we not report you to the professional body for sanction? Why should we not make a conclusion that you are unfit to hold public office? Because that is an option that is available to us under the Public Audit Act. We do not want to condemn you unheard. That's CPA Toe. Yeah, proceed.
Thank you very much, Honorable Chair, through the Governor. Usually, when there is an error in the financial statement, preparation of the financial statement, the law allows a time frame for the amendment. And now we have indicated that in this year, the financial year 25-26 financial statement will make adjustment in regard to the 278 million, which was omitted at the beginning of the year.
Is it your view that those are material misstatements and material inaccuracies?
Yes, they are material, sir.
Yeah, because what you're saying casually is for things that are not material. If you make a material misstatement and then you go ahead and sign that the financial statements present a true and fair view of the enterprise, then what you're saying cannot be of use. So if that's all you've got to say, it's okay. We will ask ISPAC to look at the matter. CPA Jepchirchir.
Thank you, Chair. In addition to what Mark has said, we've taken corrective measures to address errors that occurred in the financial year.
What has he said?
I think speak for yourself, because you don't share an ISPAC number. Everyone has their own ISPAC number.
Okay. Thank you. On the issue on retention deposits and account, we've taken, I've personally taken corrective measure to ensure that the account is well mapped. And in the current financial year ending 30th June 2026, we've been able to wire deposits as and when we requisition for projects that are due to be retained, and the auditors will be able to verify this.
So that's in mitigation, but you agree that there were serious misstatements and inaccuracies in the financial statements?
Sure. On retention, it was a challenge of us moving from the commercial account to the CBK account, which gave us a challenge of mapping, but we were able to be assisted by National Treasury, and our account is now active and well able to take care of retentions.
Well, it's like stealing my bicycle and returning it. I don't know whether the law will let you off. The theft must be dealt with. Returning it is at another level. So, members...
Chair, maybe the two officers saw in this, because these are basic errors. So, the governor take administrative action, or you order their retraining? Because I remember in the last, we had an argument, and the head of supply chain then and Mark, so we had similar issues that were reappearing on the signing of financial statements. And if it points, and Chair, and you know, Nandi, where I come from, and like your place, I know where you come from. When you throw a stone, you could hit a professor. We are fairly doing very well. So my only concern is Priska and Mark saying, do they have challenges of capacity? Because I know the problem, Chair, and Governor will agree with me, is most of these things are prepared by junior accountants. Because the lady and gentleman are wadosi. They just come and sign and go away. They don't go through the financial statements. So, in other words, CEO Finance and Mark, are you saying you need retraining the capacity, the ability of the department to be able to generate the true and accurate position of the entity in terms of financial statements, Chair? Because if I was to become the governor, God willing, these are things you take very firm position, because I wouldn't want to be brought here for impeachment because an officer somewhere committed an error somewhere.
Yeah, I think you make a fair statement, even though the fact that someone is an ISPAC member, I do not think that is someone who still requires training on how to render financial statements. Unless the standards have been lowered at the Institute of Certified Public Accountants.
Chair, it's like our profession that when I do a plaint, a basic, and Senator Dulo will understand, and the governor, if I fail to do, for example, to draft and draw an affidavit, you know, that's a basic error for any law student in year one. So, unless the refresher maybe, you don't know, or retooling, I don't know. Thank you, Chair.
I think we'll make our recommendations. It is for the governor to make his own judgment to find out whether he has the right players in his team. And I don't know, from his body language, he seems to be quite comfortable with his people and the long stories that they're telling the Senate. At the end of the day, it is between you and the people of Nandi. But for us, we must insist that things that are required by law must be done. Retentions, deposits, if you deduct, they must be provided for. It does not matter whether you are doing it from tomorrow. That money must be found. In fact, I think this is an area, these are some of the investigation areas that EACC has been very useful on in this committee. 278 million in terms of pending bills, they cannot just come from the air. There must be continuity between closing and opening balances. So all the explanations that have been put here have not given us that assurance. And Governor, I believe if you are sitting where I'm sitting, you would probably have a similar perspective. I just wonder what usually happens when our colleagues sit on that side. Sometimes the perspective changes a bit. But it is upon you to take administrative action. It is upon us to specify professional action that should be taken, and also criminal action or investigations that EACC must undertake. Reverend, you wanted to say something in closing?
Chair, I was just wondering whether my colleagues are in good standing in their professional body. Maybe we can confirm that.
Yeah, I think we had done a check. They are in good standing, and that is why now we need to ask ISPAC whether they lowered their standards. I think people must now start taking responsibility. And we are moving beyond just blaming the governor for everything. If there's a professional in the enterprise, he must take responsibility. See, you responded to most of the financial matters. Are you also a member of ISPAC? With an ISPAC number?
Yes.
What's your membership number?
9500.
Lux, please put it on record so that we can also, because if you're a member of ISPAC, I know the law does not require you to be an ISPAC member if you're a CC, but if you are a professional in that position, then you have some responsibility, a higher responsibility that you must aspire to more than everybody else. Now, members, we can proceed.
And I agree that with your position that, you know, most of the staff, when they come with the governor, they think governor will carry out the blame. I think they should know, as per your profession, even if you are an advocate, you are a supply chain, you are in any professional body, when you commit an error, we don't take it only on the governor. They even human resource, they must be held accountable. And this should be a lesson. I know in the last engagement with Nandi, we had not taken this position as a county where we go individually for a specific profession outside the accountability being held against the governor. So I think members of staff who normally come with the governor should note that despite that the governor will be held accountable after taking the oath and tabling the management responses, the individual professions must be held accountable. And I hope it will bring sanity among our counties and also bring seriousness in terms of accounting in our entities.
Thank you, Senator, for that emphasis. Unless, Governor, you have something to say, we will move to issues of HR. In HR, in the prior year, there were 14 audit issues that were raised, and we will come to prior year issues to confirm whether they've been addressed. But let's deal with what was reported in this financial year. The numbers, variances in amounts between payroll and employee costs. Auditor General, please read your finding.
Thank you, Chair. The statement of financial performance reflects employee costs amount of Kenya shillings 3,372,701,751,000 as disclosed in Note 9 to the financial statements. However, recasting of payroll records revealed total employee cost of Kenya shillings 2,833,070,772 Kenya shillings, resulting to a reconciled variance of Kenya shillings 509,630,979 shillings. In the circumstances, the accuracy and completeness of employees' cost amount of Kenya shillings 3,372,701,751 Kenya shillings could not be confirmed. Thank you, Chair.
Governor, you may respond.
During the financial year 2023-2024 financial year, the county experienced delays in settling the month of June gross salary and associated statutory staff deductions for the month of May due to the late release of the June exchequer disbursements by the National Treasury. Consequently, these obligations were settled in the beginning of the financial year 24-25 financial year as an expense.
Is there any record to support that response, Governor? Because the auditor says there is an unreconciled variance of 539 million. I thought to respond to this, you would say what you have said and then provide an annexure that confirms that amount. It would have been very straightforward. We have a reason that sounds plausible, but we have no evidence to back it up. Governor? Or auditor, were you provided with any documentary evidence to resolve that?
Thank you, Chair. We have not been provided with a document to support the response. Thank you.
Okay, Governor. Because what this means is that you have overstated your employee expense. And we all live in Kenya, so we know that perhaps there have been issues around payroll in Nandi. So you cannot leave a matter like this undefended. So otherwise, people will say that you are paying salaries to go to work. So, do we have any schedule to support your response?
Chair, we do not have the schedule, but we can provide.
Secondly, what then was the true cost of employees for that year? For the financial year, what was the true cost? Because it determines a lot of things, including your fiscal responsibility indices.
The true employee cost was 2.8, 2,833,700, and the one that is indicated 2.8 billion.
Chair, if you look at note number 9 on employees of posts, and Chair, I'm not in a very good mood today. You know, Brazil lost yesterday to Norway. So, Chair, I wish the day would have been better. Because my brother and friend governor, you were not ready, or the people are letting you down, because basically you should have asked where is an attachment to show this movement. Because even in the previous argument you had given, you had not even indicated that you are paying a pension scheme. But I can see here you have paid 32 million in pension and other social contribution, 32,500,000 and 261. You have paid compulsory national financial statement might not have been truly disclosed the true and accurate position of the entity. Chair, maybe we can still do another test of 1 or 2 in the employees' compensation, because this one on the 539, I can see there are a number of issues on employees which was there in the previous year under review, the previous prior year matters, but now there are others on this financial year, Chair.
I think because we are slowly getting frustrated, but that should not kill our spirit, because we've got a public duty to go through these reports. I think let's deal with one other issue of financial statements and then take a view from there. But it would also be important for us to spend a little bit of time on HR issues that are contained in this report. So, Auditor General, I think all the issues we have addressed, none of them has been cleared for lack of supporting documentation, so they remain outstanding. Let's look at these transfers from the County Revenue Fund. There where you had told us that the money that left the CRF is different from the money that got to the executive, and find out whether we can resolve that one. Inaccuracies in transfers from the County Revenue Fund.
Thank you, Chair. Inaccuracies in the transfers from County Revenue Fund. Note 6 to the financial statements reflects transfers from County Revenue Fund totaling Kenya shillings 7,599,066,478 Kenya shillings. That is made up of recurrent account of Kenya shillings 6,439,545,543 Kenya shillings, and development account of Kenya shillings 1,159,520,935. However, the financial statements of County Revenue Fund reflect transfers to the county government amount of Kenya shillings 7,733,771,378, resulting to an explained variance of Kenya shillings 134,794,900 Kenya shillings. In the circumstances, the accuracy and completeness of transfers from County Revenue Fund amount of Kenya shillings 7,599,066,478 could not be confirmed. Thank you, Chair.
Governor, and again the page number, because you've skipped a few pages.
Page 6.
Okay, proceed.
The variance of Kenya shillings 134,704,900 arose as a result of mispresentation in the County Revenue Fund. The actual transfer is as detailed in Note 6 of the Nandi County Executive financial statements. The transfers in the County Revenue Fund included transfers of self-reporting units, which ideally should be independent. The actual transfers were made directly to the respective funds as shown below, with Floca 62,500,000, emergency 39,895,600, KUSP 32,309,300, totaling up to 134,704,900. The extract of the financial statements is attached in Annexure 6. The audit was concluded.
Sorry, that's the auditor's conclusion. Yeah, that paragraph is the auditor's conclusion, isn't it? Am I right?
Yes.
Yeah. So you just stop there. So, auditor, Annexure 6, does it address the concern?
Thank you, Chair. Based on the response from the management, there is clearly a misstatement, the financial statement. So the confirmation of the action taken or the amendments will be done during the audit of the 2025-2026 financial statements. The adjustment that will be passed to correct the error. Thank you, Chair.
But then, Chair, we need to understand how then that the transfers were done directly to the self-reporting entities. Is it from the exchequer to the self-reporting entities? Because then, if that is the case, how this audit query is framed, it looks like there was some money that came into the account and left the account. You can see that money. So how come it's like money coming from exchequer direct to the self-reporting entities? How is it indicated in the CRF account? Why should it be captured in the CRF account? Because the gravity of your query is that money came and money left, and there's a variance. But what the governor said is that there is some money that came directly to the self-reporting entities. Directly from where?
Thank you, Chair. Normally, when there are transfers from exchequer, they first hit the CRF account. Then the CRF is supposed to transfer to the county assembly, the county executive, and other self-reporting entities, not directly from exchequer to self-reporting entities. Thank you, Chair.
And that's why I'm asking, if there was that view of money coming into the CRF account from exchequer, and it left the account, you must have that visibility. That this money that came from the exchequer to the CRF account, and it left and went to different entities. Why do you make this conclusion of this variation, 134 million? Because like you're saying, there was less money that came into the CRF account, and there's more money that left the CRF account. Is that my reading of your query?
Thank you, Chair. What we are comparing here is the amount reflected in the CRF as transfers to the county executive, and the amount reflected in the county executive as amounts received from CRF. The two amounts should tally ordinarily, but there was a variance between the two amounts as reported.
Now, members, the governor has referred to mispresentation. Mispresentation. Is that the word that you have used? Mispresentation, which is an admission that the financial statements were not prepared properly. Because that breakdown that you shared, perhaps we should have seen those transfers directly rather than having the bulk of amount going to the executive. But looking at the report on the County Revenue Fund, that misrepresentation is not only limited to transfers to the executive. Even transfers to the county assembly has been queried. Now, let's because of time, let's just pick that matter in the CRF report. Auditor General, the inaccuracies in transfers to county assembly in the CRF report, was that resolved? Just look at it quickly. Tell us if it was resolved, then we can say they are taking measures. If it's unresolved, then we know that there's a serious problem in the county. Members, I was just looking at the report on the County Revenue Fund, because this matter that we are dealing with has also been reported in the CRF financial statement. And in there's also a problem with transfers to county assembly, where there's an unexplained variance of 35 million. That's paragraph number 2. There are misstatements in exchequer releases, inaccuracies in transfers to county assembly, and inaccuracies in transfers to county executive. That's the one we have been dealing with, the one of transfer to county executive. Auditor, in your view, the inaccuracies in transfer to county assembly, was the 35 million explained?
Thank you, Chair. On the issue of inaccuracies in the transfers to county assembly, management concurs with the audit observation and highlighted that the cause for variance was erroneous misposting. So there is also an error there. So we have not resolved the issue. The issue was not addressed under CRF financial statements.
So there was an error in your transfers to the executive, an error in your transfer to county assemblies, and obviously an error in the transfer to self-reporting units. And again, I will keep asking you this because you left us in the Senate and we wished you well in the county. Are you not worried about these errors, Governor?
Chair, yes, there are issues, but I think we are explaining them. We have made explanations, but definitely we still need to give further clarification, which we request that if you direct us, we can do it within the shortest time possible, because we have given the explanations, Chair.
What's the explanation for the variance of 35 million transferred to the assembly? Because, again, there is a live matter. I don't know whether we still call it a live matter, but there are people in jail from Homa Bay County Assembly on a matter similar to this, where money left the executive and not all of it went to the assembly. Part of it went to private accounts, and there have been convictions. There are people who are in prison as we speak of a matter similar to this. So it's not a light matter. We need to be assured that whatever was sent to the assembly was received by the assembly, not received in the pockets of individuals. Senator Dulo, you wanted to
Chair,
emphasize something?
I just wanted to ask whether there was a loss of funds, auditor, as a result of that transfer.
Thank you, Chair. There was no loss of funds because the management has admitted that it was just a posting error in the financial statements. Thank you, Chair.
What does that mean?
Auditor, you also have, as much as you have a responsibility to give us assurance, I think you also have some residual advisory responsibility to the entity. If it was a misposting, it means that they inflated their expenditure, isn't it?
That's true, Chair.
Yeah, so how can that be something to easily explain? Because numbers must balance. So if you say you sent 35 million more,
Yes.
and yet you didn't send 35 million more, so where is that 35 million?
Chair, I was commenting about the issue of loss because without evidence, you cannot say that the money went to somebody's pocket outside the what was budgeted for in the county.
The evidence we have are these financial statements. One financial statement says 766 million was sent to the assembly. Another financial statement says only 731 million was received by the assembly. And therefore there's a variance of 35 million. What do we call that 35 million?
Thank you, Chair. This, as explained, is a misclassification. According to their response,
they are here, they will tell us their response, but you queried this and escalated it, issued a certificate saying that 35 million cannot be explained.
yes.
What I'm just asking you is if you now have clarity on the 35 million on where it is. If not, then let the entity explain.
Thank you, Chair. They will explain, but as at the time of audit and conclusion of our reports, they are not explained. The issue is coming too late when we had already concluded the audit, and based on their response, this is only subject to confirmation when they correct the errors in the financial statements of 2025.
Let's get the explanation. Let's get the explanation from the entity, because it cannot be you to explain it. So, Governor, just to contextualize it, from your financial statements, which we restrict ourselves entirely to the financial statements so that we don't bring in extraneous issues. From your financial statements, you transferred 766 million to the Assembly. But from the Assembly's financial statements, they received only 731 million. 35 million cannot be accounted for.
Chair, let me ask the Chief Officer to give us an explanation on that.
Chief Officer?
Thank you, Chair. Through His Excellency the Governor, the true position is the amount that you transferred to County Assembly is as captured.
Mention the amount.
The amount that you transferred to County Assembly is 7,731,630,547.
What about what you have in Note 13 to the financial statements?
What we posted as 766 included a figure of 350 million, which was indeed a transfer to FLOCA program, and we have as evidence in the CRF bank statement.
350 million.
335. Sorry, 35 million. Sorry.
We want you to be clear. The Note 10 that is referred to by the Auditor General indicates you sent 766 million. Could you explain that?
The figure that we captured in the financial statement as transfer is 766 million. That was not the correct figure. The correct figure is 731 million, giving that variance of 35 million. This was an error of misposting, as we explained to the auditors, and the figure can be traced to 35 million being transferred to a self-reporting unit, that is FLOCA. We have the revenue, the CRF statement to demonstrate the same.
So that could be the sixth error we are dealing with today on the financial statements. I wish ISPAC was here.
And even misstatement in even CRF number 1, the variance of 567,884,336. From the disclosed, there was a variance even from the National Treasury. Then this one that 35 million inaccuracy transfer to County Assembly. And then the interrelated relative to this, to the main certificate of executive of 134 is reappearing in number 3. So these errors and misstatements or misclassification is becoming too much.
Sorry,
and the governor is not assuading us from believing that there is a problem.
So, let's go back to that note again. I'm sorry, I said note 10, but it's note 13 in the CRF. Note 13, which breaks down transfers to County Assembly, which is clearly stated as 766, which you have admitted also was erroneous. Now, in terms of correcting it, is it a subsequent year reporting correction, or how have you addressed it? Because you're explaining that no, it ought to have been 730. It ought to have been 730 what? 731. But here it reads 766. I didn't get your explanation on that 35 million. Where is it? Where it went? Can you show us in the financial statement or in the notes? Or is it something that you are planning to rectify in subsequent year?
Thank you, Honorable Chair. Through the Governor, we are going to correct in the 25-26 financial statement, but the amount, the variance of 35 million can be evidenced by the revenue fund account, the CRF statement of 35 million being transferred to FLOCA account.
But why would one statement be superior to the other? This one says 766 million was transferred. They are all statements prepared by competent people. So you can't tell me that this is wrong, but the other one, disregard one and adopt the other one. Now, Auditor, how do we get assurance as a Senate that the 766 we are seeing here did not in reality go to the Assembly and then, or did not leave the fund destined for the Assembly, and then it was received at the Assembly 35 million less?
Thank you, Chair. We can confirm this from the financial statements of the County Assembly and confirm the correct figure that they received. Thank you.
No, that one you've already stated. You're saying the Assembly received 731. The Executive dispatched 766. And they're saying it was an error, that 35 million went to a self-reporting entity. How do we get that assurance that that indeed is true?
Thank you, Chair. I think with the confirmation of the management and what they have indicated as an error, we will go ahead and confirm from the financial statements of FLOCA and the other entities.
Auditor, you're the one who does the auditing for the Assembly. Didn't you check that time when there was that variance?
Yes, we checked and confirmed that. Sorry?
What did you find as the receipts to the County Assembly? Is it 731 or the other figure?
Honorable Chair, let me state that we did confirm, and from the audit point of view, what we usually do, we compare the two financial statements and raise a concern on the unreconcilable differences, and that is why we raised the audit observation.
So the observation is complete. That finding is complete.
As at now, there's still variance.
Yes.
Yes.
Okay.
And Governor, it was your assertion that 35 million went to which fund?
The FLOCA, climate.
And say if it went to FLOCA, can't we find as a transfer from CRF?
Yeah, because under Annex 6, you attach certain financial statements, maybe just to help you. And the third was an extract of FLOCA. And in that extract of FLOCA, you are demonstrating the 62.5 million, which I think was reasonable in the earlier query. So where is this 35 million? Because we are looking at an extract of statement of financial performance for Nandi County Climate Change Fund. Under Appendix 6, Annexure 6, the financial statements that were submitted by the government. Because that 62.5 had already been fully accounted for by the governor in the earlier query. So what about this 35 million? The officer who said you can clearly see it in FLOCA, please help us, we can't clearly see it.
Through the Governor Chair, in our CRF statement, when you look at, and I'll share shortly with you, just in case you don't have a copy there, on 2nd of July, 2025, there's an FT, a funds transfer from our CBK account to the Flocker account, 35 million.
Where is it? Through the chair.
I
Where are you
will,
reading from?
I will share what I have here briefly.
No. We are not taking new evidence unless the chair directs. Is it part of your annexures? Whatever you're reading.
We made reference to it. But
but
this is a statement I've just asked to be printed out.
Is it
to
part?
solve?
I was referring to Annexure 6, which the governor tabled under oath, which is the evidence before us. What you're referring
Yes.
to, is it part of Annexure 6?
Annexure 6 is a product of the statement, the bank statement. So I just went for a further detailed bank statement to explain what we have in Annex 6.
Chair, out of
But
curiosity.
the chief officer said we would see it in the financial statement,
Yes.
not the bank statement.
Yes,
And that's why I brought you to where your financial statements
Yes.
are.
So,
Because remember, the 62.5 million has been accounted for under the 134 million query, which you are provided a detailed breakdown of the three: Nandi Climate Change Fund, Nandi County Emergency Fund, and County Government of Nandi Kapsabet Municipality, which sounded reasonable to explain the earlier question. But now you have said that these variants in transfers to the assembly, we will be able to see it in the financial statements of the Climate Change Fund. So show it to us, because we can see 62.5 million, which explains the earlier query. Where is the 35 million, which you allege didn't go to the assembly, went to Flocker?
Yeah.
Where is it in the financial statements?
you should have read the complete set of the Flocker so that you see the breakdown, the financial statements.
So you're the ones who chose to bring the one-pagers to us, because the one-page is a snapshot. But whatever it is, whether it was 10 pages, we should be able to see it as revenue from either exchange or non-exchange transactions, isn't it? The 35 million.
Yes, so Chair, what you see on the Flocker is a sum total made up of several transfers for Flocker. That's why then my bank statement then has the breakdown of which
So is the
35
35
indicates.
million part of the 62 million?
Yes, as shown on the statement.
And that 62 million was used to account for 134 million
Correct.
in the prior query.
But that is still Flocker funds, right?
No, 134, you accounted for 134 by saying you sent money to Flocker, you sent money to the municipality, and you sent money to the emergency fund.
Correct.
And we accepted that explanation. Correct. So you can't use the same explanation for the 35 million unless we see a transfer of 35 million in this financial statement.
That Flocker.
You can't use the same answer for two different questions. Unfortunately, this is money. This is not theory.
Because, Chair, the accuracy of financial, and that is why I asked the first question, is the governor running away from the financial statements? Because if what is in the financial statement, the CCM does not believe is the true, accurate position of the entity. And interestingly, Governor, your CC is like carrying Wakenya. He has more information than you. I thought he should have given this information when you are sitting to prepare this information. I thought that should be the position.
In this case, he could be carrying the wrong Wakenya because you are not getting the right answers.
Because, Chair, so CC and Governor, do you want us, so are we disregarding what Chief Officer of Finance said and then go for your bank statement? Yet it cannot be tabled now because, Chair, I'm on what the Governor refers as in Annexure 6 on Flocker Emergency and KSUP. And I've seen 62.5 million as other income, but it is not reflective of what the CCM is going through in the bank statement.
Yeah, so CC, what are you trying to tell us from the bank statement? Maybe we should give you an opportunity, but be factual and brief.
Thank you, Chair. So the 35 million, when we made our financial statements, it just came just after the financial year, but we had, that is 2nd of July, and the cutoff period we had been given is up to 10th of July. So when these funds hit our account, the understanding, or since it wasn't clear, we thought this is part of the county assembly fund, so that is why the disclosure came on the county assembly side. But with more information coming, that is why on the response that we are giving is that this has then to be restated to show that county assembly is 731, not 766, and the FLOCA funds should reflect this amount of 35 million, and that is an item that
what were you are referring to some documents which had said we are not going to admit. What would have been their value in terms of explaining this matter? Because I know we didn't give you an opportunity. I'm asking you, those bank statements that you're talking about, what were they supposed to confirm?
Just to know exactly where the 35 million is sitting.
And you mentioned a date in July.
Yes, 2nd of July, 2025.
The disbursements to the county assembly, Governor, and maybe now we can go back to policy and practice. We would expect, if there's a budget that's been approved and that the county assembly ought to get, say, 600 and let's say 600 million, and all the money comes, you receive your full exchequer release. Do you allocate to the assembly fully as per their budget, or you make some considerations and you reduce their allocation?
We give them their entire budget.
You give them the entire budget?
Yeah.
So in this case, in this financial year, what was the budget for the county assembly? Was it 766 or 731?
731.
And in terms of payment, are you able to, okay, maybe there's no strict control where if you have a budget of 731 and you use the same vote to pay 35 million more, maybe the system does not have that control of matching budget and expenditure. Reverend, if the budget for the assembly was 731 and it's already been captured, and then they were to transfer 766, 35 million more, the system allows that?
Chair, they cannot transfer money without approval from control on budgets. And the control on budget has to check what the budget, what the amount in the budget and the amount that they are transferring. So the control on budget is the one that checks whether what they are transferring and what was approved they are tallying. If they are not tallying, they cannot be transferred.
Okay, Governor, I'm seeing we are getting to that time where the House sits usually at 2:30, and we try to tie our meetings to that 2:30 timing. We need to make some progress. We've dealt with about 6-7 financial statement issues. None of them have been resolved to the satisfaction of this committee. We are still left with question marks around the 35 million. I think we will give directions on how this matter should be handled. But if we were to push it to the next audit cycle, then there needs to be proper explanation or justification. We have asked the Auditor General whether it's indicative of loss. I think someone had asked Senator Dulo whether it's indicative of loss of public resources, and you have said you can't tell. But I've also given you a live example of a county where such operations were used to steal public resources. I think even in Migori, the EACC is investigating a matter where the money that left the executive was more than the money received by the assembly. And there was some firewall in between where money got lost. So I hope this is not the case. And members, we can apply our minds to it. And if the auditors can tell us they're satisfied, it's okay. If they're not, then it can be investigated along Homa Bay, Migori, and a few other cases where the transfers do not make sense. If you allow, in the next few minutes, we just deal with 1 or 2 HR issues and maybe take a view on how to deal with the residual matters. Honorable members, we can proceed to, we can get out of the County Revenue Fund statement and go back to the county executive statement. The matter of undisclosed contingent liabilities, Governor, are you here with your county attorney?
No, the county attorney is not here.
But there's a substantive office holder.
Yes.
You have a substantive county attorney.
Yes.
Yeah, because when you do not disclose contingent liabilities, it is partially a problem of the accountants and partially a problem of the legal practitioners. Now, this matter, I think, Auditor General, you said it's still outstanding because it was not disclosed in the financial statements. It can only be corrected going forward.
Yes, Chair.
So we can keep it in view. On HR, perhaps we start with this matter of redundancies. Then we come back to the issues of where there are conflict on figures. Let's understand this matter, Auditor General, and explain redundancies.
Thank you, Chair. Unexplained redundancies. Review of payroll records reviewed a significant reduction in staff numbers from 4,884 in the month of September 2024 to 2,999 in the month of October 2024, resulting to a variance of 1,885 staff. Management attributed the reduction to dismissals and terminations. However, the dismissal records accounted for 1,863 staff, leaving an unexplained variance of 22 staff whose employment status could not be determined. In addition, there was no documentary evidence presented to confirm the reasons for dismissal, the due process followed, or whether the affected staff were issued with certificates of service as required. In the circumstances, management was in breach of the law. Thank you, Chair.
The management...
Sorry, just the page number, because...
17.
Page 17, yes, you may proceed.
Chairman, the management reinstated 29 Walter Reed staff to the payroll. Subsequently, 7 of the officers retired, leaving 22 active officers in the system, thereby accounting for the observed variance. The comprehensive list of the reinstated staff, including details of those who have exited service, has been prepared and is available for review by the auditors, and we have Annex 11.
If you read the second last sentence of the auditor's observation, Auditor General, can you read it, the one that starts with "in addition"?
Thank you, Chair. In addition, there was no documentary evidence presented to confirm the reasons for dismissal, the due process followed, whether the affected staff were issued with certificates of service as required.
Governor, what's your response on that part? Because you seem to have responded to the first part of 29. Do we have anything on record to just to help us understand the process, whether it was lawful and prudent? That is the objective of audit, whether actions taken are lawful and whether they are prudent. So the auditor queried the due process followed, and I thought that you'd do a summary, just because I would be happy to propose the model you used to other counties, including mine. We have a seriously bloated wage bill, which PricewaterhouseCoopers has looked at, has made recommendations, but we've not been able to take action. I would be very happy to ask my county to come and benchmark with Nandi. So, do you have anything on record, or you, since you're on oath, you can explain the process that was taken?
Chair, we do not have any of the documents as part of the bundle of documents presented, but since I'm here, I can be able to just give a rundown of the process. When we had a national wage bill conference in our, nationally, we were participants as counties, and the whole discussion around the runaway wage bills and what contributes to the runaway wage bills within counties was shared with us through the through the conference. Part of the resolutions of the conference, which we were part of as county governments participants, was a recommendation on how to deal with wage bill. And one of the recommendations was that county governments or entities, both in counties and county governments and national governments, should undertake HR audit processes. We did decide as a county government to undertake the HR audit. We had the option of engaging some of the government entities or human resource consultants. In our case, we decided to engage the Public Service Commission. We did engage the Public Service Commission. They came to the county. They did HR audit through the process and gave us a report. And out of the report, and I think part of that report has been shared in part of the committees within this house. It has been a subject of discussion within maybe not within this committee. We have alluded to it severally in this committee, but also in the various other committees. So when the report came out from the Public Service Commission, the County Public Service Board, we owned the report and we received the report as a county government executive, and the County Public Service Board, since that is the entity that is, charged with that responsibility, also got the report. They considered the report, adopted the report, and worked on and initiated their own process of adopting the report and implementing the report. Part of the recommendations of the Public Service Commission report, Human Resource Audit report on our county, was that it showed that there were massive irregularities in the processes of hiring, some irregularities in terms of promotions, some irregularities in terms of, the terms of payment for staff, some of them, irregularities on the payment of some allowances. Some staff were getting allowances that they do not deserve. Others were missing some allowances that they deserve. So there was a whole report that captured that. But at the center of that report was the flawed or the hiring processes that were irregular. And the recommendation by the Public Service report that was adopted by the Public Service Board was to undertake, the termination, so that then a fresh process that, abides by the law was undertaken. So the Public Service Board did the process of termination. The termination process found its way to court. Those who were affected went to court, and a number of issues were dealt with in court. The matter was determined at the labor court. They found, a number of issues had been presented to court, and I think that brief, if we can be able to provide the written brief in terms of the outcome of the court process. But the sum total of the process is that the Public Service Commission or the county government had the power, and the Public Service Commission had the right to undertake the audit when requested to, and that what was found in the report of the Public Service Commission was okay. But then they faulted the process of termination. So that termination process was faulted on account that the County Public Service Board did not give the staff due notice. There was an element of failure by the Public Service Board to provide or to give staff notice, and they went ahead to make recommendations to redress that breach of the law by the Public Service Board in not giving the notice. And in terms of that, they provided they made a ruling that staff that had been, because of that breach, staff who had been who had served with the county for less than 1 year, there was a certain amount that was presented. They should be paid 2 months salary in lieu of the fact that they were not given the notice. Those who had worked for 1 year, 2 years, a period of 1 to 2 years, there was an amount or the number of months they were to be compensated. Those who had worked for more than 5 years, so they categorized the same. So the county, we were then directed, or we are expected to proceed to implement the ruling of the court. What then happened is that the same staff were not satisfied. They appealed. So the matter, as we speak right now, lies within the Court of Appeal. However, they did not get orders stopping us from implementing the ruling. So, in terms of advice that we have from the county legal office, the county attorney, is that as a county we need to proceed to undertake to implement the ruling that was given by the labor court. However, so that is the process that, that explains the process with regard to the audit and the termination and the matter that went to court. But on the part of the county government, the recommendation that was given by the Public Service Commission then was to then do the recruitment regularly. And that process has started. The staff who were affected initially were 1,885. We have since, as a county, or the Public Service Board has since started the process of regularizing and doing the process of hiring afresh. And up to now, we have done about 1,200 staff have since been hired, through the proper regular process as recommended by the Public Service Board. There is still an ongoing hiring process. Even right now, there is ongoing hiring process for about 200. So eventually, we have been able to then regularize the process, bring down the numbers. Some have, any issues that related to allowances that were not regular, all of them are being addressed through the regular, hiring process that is going on by the Public Service Board. We then, Chair, could if this committee directs, we could provide a comprehensive, written advice on this. Or not advice, but chronology of events and the outcome and that detail that we can be able to provide. But suffice to say that, the matter is there is still an element of the matter at the Court of Appeal, but also there are good progress that has been made by the county government in terms of regularizing and also ensuring that, and that has cut down our wage bill. It has regularized staff who are, every staff now who was supposed to get certain allowances under the new regularized process, get their allowances as expected. So that process, we have made progress with that process to that extent.
Just to guide us, what are the matters that are still before the Court of Appeal so that we don't go sub judice?
Well, the Court of Appeal, the staff in the appeal the entire ruling, because what the staff wanted was a determination that, or they wanted reinstatement. The entire team of the 1,800 wanted reinstatement. Even those who had issues, who had irregular promotions, wanted their promotions retained. Those who are getting allowances that were not entitled to them still wanted that, the status quo retained, including even those who are hired completely outside a process. They still wanted the court to determine that their their status as staff of the county be retained. But then the ruling of the court was that all those processes by Public Service Board, by Public Service Commission were okay, except that the Public Service Board should have given a notice in terms of the termination process, and they provided a redress to it, which I think is a matter that is now subject to the appeal.
Okay, honourable members, Senator Chirati?
Maybe, Chair, just quick. Governor, on this, so you are saying that it is only 20, the others retired, you retain 20 from your document 26. Number one. Number two, these 26 you have retained, so those are the only employees that were retained. That will be my question one. Question two, if I listen to you carefully, you have said up to now you have hired 1,200, and the chair was almost congratulating because when you reduce it became 2,999, but from your explanation orally you have added 1,200, that comes to 4,199, and you are saying there is ongoing recruitment. So my question, this increment of 1,200, and how much are you intending to hire more? Because you had reduced from 4,884. So on the retention, I know you have said it's a matter in court, and the entire lot wanted to be retained without going through the competitive recruitment process by the County Public Service Board. So what were you firing these people because they were irregularly hired or unprocedurally hired, not because of any other motivation, maybe like bringing down to 35% as provided by wage bill? Or what was the motivation? Was it to regularize the process you are hiring because they were irregularly hired or unprocedurally? Or what was it? And finally, my third question, Governor, looking at the wage bill, the wage bill after recasting came back to 2 billion and 2.8 billion that you indicated, although your financial statement says 3.3 billion. So what is the implication of this additional recruitment of? And then Governor, if I remember right, I thought it was in August 2024 that the termination happened. And I thought at that time the pay slips has been issued. Does it mean those people, when their contracts and services were terminated, a date been paid? Chair, I yield back the mic. Those are my three questions.
Senator Maruma?
Yeah, Chair, mine would be to the Governor. Number one, how has the laying off of the staff affected service delivery, especially on the essential services like hospitals, ECDE, revenue collection? Has the laying off affected revenue collection? Number two, is it Senator Cherargei who said that this matter is still within the radar of ESC? If so, then what is ESC investigating? Number three, Chair, you must have done then your linear programming. You must have done that to determine your staff establishment. So, because you're saying you are continuing to employ, so are we likely to employ until again we overshoot the 35% threshold?
Chair, can I add so that, Governor, I don't need to come back? I've seen most of these people you retain are people in health sector, especially Walter Reed. So what is the fate of the universal health coverage staff that there was the issue of 8.9 billion and they had demonstrations? They normally come to our gate, but I've advised them to visit you individually because you will address more because we finished. I know there was an issue with the budgeting, but in this Walter Reed, or I've seen a number of that you have, what is the fate of the UHC staff that are within the system? Thank you, Chair.
So, Governor, in your response, it is an opportunity for us to understand how the process ought to be. At least the courts of law have been involved, so you've got a very fine perspective of how this should be done.
Yeah.
So it's a learning exercise, but we also need to get answers to some of the queries raised by the senators.
Yeah. So, Chair, part of, and I think let's just put it in context, that the way to reduce wage bill is not just in the numbers. It is also in terms of the terms of service. For example, one of the irregularities that was raised by, that was part of the irregularities that were shared by the Public Service Commission report was that some staff were hired not at the entry level. So you have a staff who is joining service, the job is required, the position is needed, but the person, instead of coming in at the entry point, the staff is, engaged at a higher job group. So the person earns a salary that he should be earning after 2-3 promotions as an entry point. So already, if you deal with that aspect of correcting the entry level, you already reduce even in terms of the staff emolument. Some staff, for example, under health, we have a cadre of staff that are entitled to health risk allowance. Some are entitled to extraneous allowance. There were staff who ended up enjoying some of those allowances that are not entitled in that category. So when you correct that issue, even by retaining the numbers, you are still bringing down the wage bill, because you have, you have released some of the, some of the allowances that they were being given or they were earning, yet they were not entitled to earn that allowance. Some people had, some irregularity that came out, that was brought out, was the fact that some people got promotions, accelerated promotions. The promotion is supposed to be every 3 years, somebody moves, a job group higher. You have somebody who was employed 3 years in service, 2 years in service, but has moved 3 job groups. Fraud, so to speak. So by addressing some of those issues directly, you then are able to bring down the cost of wage bill, even without reducing the numbers. So one of the issues that came out was that particular one, that when you address issues in terms of even the job group, in terms of the entry level, in terms of the allowances, even with the same numbers, you can still be able to bring down the wage bill. However, one of the other issues that came out was the hiring necessary. How did you determine that you needed, for example, Chair, my senator has mentioned health. You have, how many nurses do you have? What is your, one of the questions that we had was, we didn't have an approved staff establishment at the time the hirings were going on. So we were told that that process is regular on account of non-existing or non-approved staff establishment. One of those recommendations was for us to work on a staff establishment. We actually proceeded on, worked on it. We now have, so that these ongoing hirings that we have had are as per the staff establishment that has been approved. So the hiring was, in terms of the decision as to how many staff will be hired by the end of this entire process, I can't be able to give that number as at now. I said that we have a figure of about 1,200 as at now. And I think, if you gave us the opportunity when we do the written, submission on this particular matter, we can give a little bit of accurate figures. But for us, really, we are now hiring on the basis of an approved staff establishment. 2, that the process is being done openly, competitive. Previously, you would have people engaged without an advert, without interview. So there was serious fraud around that process. Now we are doing it as provided by the HR policies. We also didn't have HR policies. We now have. We didn't have scheme of service for some of the cadres. We now have some of those scheme of service. Some of them we were using old, or the Public Service Board then used old scheme of service when there is a reviewed new one. I will give you an example. Previously under the transition authority, staff, for example, ward administrators and sub-county administrators had a very unique scheme of service. Now that was reviewed subsequently, and we now have a standard scheme of service. We no longer have, specific job description of ward administrator, sub-county administrator. They are all administrative officers. By even changing that alone, the staff who are affected, you bring down the cost of, the terms of service. So there is a whole, raft of issues that end up helping us in addressing the issue of the wage bill. But then there are questions that my senator raised on UHC. If you look at when the Public Service Commission did a report, they said that, for example, all these staff were employed without an advert and a process. But there are certain staff that that under Walter Reid, staff who are working within our county, but they were being paid by this program, the Walter Reid program. When the program closed, there was a whole discussion between the Ministry of Health and the counties that these staff who had been employed by Walter Reid and they were in the payroll of Walter Reid, offering critical services to the county, needed to be absorbed because the work that they were doing in the county was continuing. We adopted, the funding under Walter Reid, ended. Those services were brought back to the county. We continued to fund them as a county government, and under that MOU and the agreement with Walter Reid, the staff were going to be transferred to the county. So when the Public Service Commission did the HR audit, they told us these 29 staff were part of the staff who are engaged without a process. But then we ended up explaining to the Public Service Board that these 29 were from the Walter Reid program, and there was a process. The Walter Reid had done a competitive process, engaged them, but when they transferred the job to us and the mandate to us to deal with those items that Walter Reid was dealing, this staff also joined us. So basically, we then had to take them back to the payroll because there was a process through which these staff were engaged. So, Chair, if you then can just allow, because I think...
Yeah, because I think you have a lot of substance, but it was in written form.
Yes.
That's why the auditor had asked for it. The auditor had asked for documentary evidence presented to confirm reasons for dismissal, the due process followed. I think this is a matter that we need to document properly.
True.
Because other counties might want to use a similar approach. And they can benefit from the mistakes you made.
True.
They don't make the same mistakes.
Agreed.
I think there was a question which will perhaps allow us to close this. What has been the effect on the numbers?
The
financial numbers, leave alone the head count. Because head count looks like you released 1,885, you brought in 1,200, and you're still hiring more. What's been your... as the compensation to employees figures reduced? Because again, when you terminate, I don't know whether there could be terminal benefits that would be much more expensive than regular monthly payments. So has there been an improvement or a reduction in your employee costs, and by how much?
Well, again, it can be captured. We can include the actual figures in terms of the reduction, but definitely suffice to say, yes, there has been a reduction. However, I think there was a point that was asked by Senator Mwaruma in terms of how was service, the rendering of services to our county affected. Yes, it was 1,800 was a major shake-up in the human resource. That is why, and it explains even some of the challenges, because it affected all the staff from health to finance to human resource, literally everywhere. Yes, there was it affected our service delivery, but we had contingent, decisions that we had to make, including talking to some of these staff who are affected, and then we showed them the roadmap that we are now starting the process afresh. We will give priority to those who qualified and who are working with us, and most of them agreed to work on a stipend during that period to just continue rendering services, especially in critical areas like health and many other areas. In finance, we have appeared here before where we had challenges even in terms of retrieving documents supporting the auditors when they are doing the work, because a number of those staff were affected. So we tried to manage, but now with the 1,000 of about 1,200 already back on service, the service delivery within the county has now stabilized, and we can still provide the actual figures in terms of those changes, how much we have been able to reduce, Chair.
Okay, members, Senator Maruma, do you wind down?
Chair, lastly for me, there must have been officers who are involved in the breach of law on employment. What happened to them? Are they still working in the county?
As well as a county public service board,
Yes.
and when were these things happening?
Chair, maybe in addition, through the chair, he didn't come clear on the matter of
UHC, yeah,
I agree when he said the Walter Reed staff who had served, they had known the place, they were experienced,
Yeah.
they were cross-spread across the county. What about the UHC staff? How many
Yeah.
are there? And what is Nandi individually? Because its own entity doing to ensure that the UHC in Nandi are absorbed and they are able, among these, because Governor, I believe in this addition 1,200 or the more you're hiring, at least the priority should be the health sector.
Yeah.
So, Chair, maybe I yield back the mic.
So two things. There is, and Senator, let me just explain this. The UHC, we appreciate that this House has helped us to address partly the UHC staff, because these are staff that an allocation, and I think ours was about 100 and something. I can't get the exact figure, but I think 100 and something. The Ministry of Health gave us the numbers. Every county was given a number that you need to hire. About your allocation is about 150, others 200, others 250, for you to address the gaps that were existing in counties in terms of human resource for health that time when we had the pandemic. So the agreement was that the counties carry out the recruitment, the Public Service Board carry out the recruitment on behalf of the Ministry of Health, but the Ministry of Health would pay the salaries. So we did hire, the recruitment process was done by county governments, through the Public Service Boards, but the payment and the budget remained at Ministry of Health. The discussion now has been to move that budget to the county government, and two, so that the payment of salary is done by the county government for the staff who are working for county government under UHC. Then the second question was move the staff and also move the payroll, or move the payroll and the funds. So what you have done as the Senate is to include a conditional grant for the amount, the 8.9 billion through the conditional grant. And the discussion was that we need to put these staff who have worked on contract into permanent and pensionable, which we said we agree with that, putting them on permanent and pensionable. But the way to put them into permanent and pensionable is by including their salary as part of the shareable revenue. So that in the next financial year, if you put it as conditional grant, it then means it has to be budgeted every financial year. Our position is that if you then have to budget every financial year, it only means then you shouldn't have ideally put them on P&P, but put them on contract of 1 year renewable when the money is received.
Chair, allow me to interject.
Yeah.
Governor, does that explanation make you comfortable? Because, these are people's children.
Yes.
They are our brothers. They are our sisters. They have stayed there for 6 years on contract, not knowing what should happen to them. This UHC staff. You have been employing nurses, I know.
Yes.
In those 6 years.
Yes.
You are not considering them.
Yeah.
Do you think it's a good explanation to say that because you don't have equitable share to hire the UHC staff, because you are getting just grants, that should leave them out? It makes you very comfortable as a human being, as a governor. Really.
I want to give...
Maybe let me add, I thought in the IBEC, which is chaired by Professor Kithure Kindiki, a good neighbor of
More fire.
More fire. He's excited because he knows Kindiki might be the president in 2032. So, and he will be the Farouk of that time. So, Chair, what
is automatically
Order.
No, it was on a lighter touch.
Yeah, let's just get back to the report.
Yes.
Yeah.
I wanted him to be alert on what I'm about to ask.
People go to Western of late.
But the governor yesterday endorsed another candidate.
We might be approaching the point of diminishing returns.
No.
So, Senator Chiradge, just prosecute the point.
You have abandoned my projects.
But the governor was in that meeting. He said something. You'll ask him after this about 2032. So, Governor, the issue. So, what are you saying? Because we have had the president and IBEC, where the deputy president chairs. We have had the president even here in Kajiado requesting that as COG, and you are one of the officials of COG, to fast track. While I agree, as a Senate, the 8.9 billion should not have been a conditional grant, which we are ready to rectify when the House resumes sitting. So you have given a lot. So do you, what is it that you have said that the payroll, there were gratuity interest that needs to be paid to these 7,600 staff. So what are you telling the UHC of Nandi? And the allocation of 8.9, although conditional, which we will go and rectify, are they be given priority when the hiring is, or you confirm them? Because you have gone on record that the County Public Service Board did interview them and gave them the opportunity. Because, Governor, you have to appreciate, from 2020 to now, when they used to fight COVID, it's so painful. They have families. I'm told some of them are depressed. Some of them have lost their wives and husbands. Some of them cannot educate. Some of them cannot pay rent. So some of them might even miss going to heaven because they become hopeless. So, Governor, what are you telling the UHC from Nandi so that you transfer that to your colleagues in Council of Governors, and so that whenever you meet, you don't need to mention Chair, Mwaruma, myself, and Sifuna. You just mention about UHC.
Yeah.
So what is it? We just want that silver bullet.
Okay.
That we can take home with it.
Fine. I think there are specific questions. Of course, there are broader issues of policy.
Yeah.
Maybe if you can make your response very brief. I was hoping that we'll be done with this meeting by 3 o'clock, but I can see that time is running faster than we are. So, brief response.
So I think I'm very straightforward. We sat in IBEC and agreed that the resources need to be in in the shareable revenue, so that it's for perpetuity, that the resources are available in perpetuity. We also agreed in a summit that should be the case. We even sat in joint meetings between COG and Ministry of Health, agreed to even write a joint letter to National Treasury that amount needs to go into shareable revenue. That was agreed, and if that was undertaken, since there was nobody who was against it, even the National Assembly initially, because some of their representatives, we have interacted within those forums. Everybody agreed that was going to happen. When we saw that the figure did not find its way to the shareable revenue, for us it took us aback, because why? And this is something that all of us have agreed. It secures the money for the future. So our thinking is that if we just sorted that should be able to be an obvious, and the transfer, or not transfer, but the confirmation of this stuff from contract to permanent and pensionable is an easier process, because we already hired them. I think it's just through a feasibility, suitability process, just a small process, because in any case, they were recruited competitively at the time they were being engaged for the contract. And I do not want to, so that is the position of COG. It makes a lot of sense. I agree with it. However, I think that even as we deal with these issues that we are now handling at converting that amount into the shareable revenue, I already have a roadmap to convert, the ones in Nandi into into P&P, because I agree for sure. When we have hired we have hired several other nurses, after with the UHC staff being there. We didn't give them priority because they were already on payroll anyway. So we were looking for additional staff. So if you brought in any staff who was on UHC into a number that you are recruiting, it only means that then you would have shown, you would not have achieved much, because you are getting somebody who was already working for you, though being paid by Ministry of Health, and you engage them now, that yet you cannot replace the UHC because the window to replace the UHC had gone. So these guys have suffered for sure. And I think for me and for my county, I can speak for myself, there is already a process, because I have no reason to doubt that you as a Senate will correct that issue on the the 8.9 billion that was given. So I'm in the process. I have already discussed with the Public Service Board, and I think there is a process being undertaken. And within maybe a month or two, even with or without the addressing of that challenge, I think I'm working on something within the county.
I think the other direct matter relating to Nandi that has not been addressed is the officers who are responsible for the mess you're clearing, the County Public Service Board responsible for that mess. What is being done to them?
There were two...
Including, sorry, Governor,
yeah.
Chair, and also the payroll managers.
Yes, yes.
They must have been a narcos-like and of executing, because if the County Public Service Board, the people in charge of payroll,
yeah,
it is a
cartel.
Yes.
It sounds like a cartel.
And so that also the governor can answer all the questions. When counties are employing, they can employ a fresh graduate to be a director, job group,
Yes.
Yet when you are in the main public service, you have to reach toil and moil.
Yes.
Like engineers, for you to reach chief engineer, you must have worked for very many years.
Are
you comfortable when you employ fresh graduates as directors?
Okay, start with the question of fact on what's happening to the officers, and then conclude with the last one on opinion.
So I mentioned the matter in court, which was a labor issue that was taken by the staff who were affected. However, we also then did invite DCI and the EACC as a county government to come and, when the outcome, after the report came out, some have been taken to court. Others are still being under investigation by EACC, and you are better placed as a committee to find out from EACC, because, a number of staff have been taken in for questioning. Some of those public service officials who are affected are on interdiction. Some of them are on interdiction, courtesy of the process that have happened. So the DCI is seized of the matter. EACC continues to investigate the matter. A number of our staff who are affected have recorded statements. Some of them are on interdiction, and I can give also that full brief. But I think in terms of the level and the status of the investigations and the case under EACC,
we'll find out from EACC, because they sit here. Around which year were these things done?
That was 2024. The termination was in 2024.
But
the processes...
Irregular recruitment?
It happened from, because we gave them, the Public Service Board did investigation from the time devolution started, from 2013. So all these hiring...
continued to happen under your watch?
Yes, some of them happened under my watch, yes.
Yeah.
Yeah.
Did it involve some of your close allies who I know them personally?
Sorry?
Did it involve when you I expected you to give us names, especially when you said there were officers who are rising quickly in promotion in job group. Did it involve some of your allies?
All the staff in the county are my allies. These are people we work with. But really, it's a criminal process. I mean, I can't just name names of people here. But I think the whole process was, is being investigated. A lot of them have been called in for questioning, writing of statements. Some have even been taken to court. So really, the aspect of what needs to be done and an accountability on those issues are really within the various institutions of accountability. And we as a county government, when we wrote as a county government to EACC, we gave them all the information, we gave them all the details, so we know that is a matter that is being dealt with at that level.
I think as a matter of...
just follow up.
Maybe let me say this before you have the last bite. From our conversation for the last 3 hours or so, I think it's emerging that there are two things that you must clean up.
Yeah.
Seeing that you've got 1 year to go to the end of your tenure. It is the issue of pending bills, which we have spent a lot of time on, and it appears that we don't have a very clear picture. And it's also on this issue of HR. The one on HR, fortunately, you are taking action. And the reason why I asked when these things happened, because sometimes governors say it was a problem of the past, but they've been happening under your watch. So you've got 1 year to fix those two issues. Your payables, to fix the issue of HR, but also to ensure that you leave behind a civil service, a county civil service, that is up to the task, that takes its work seriously. I think there's a little bit of seriousness that you still need to instill on your team and your officers. Senator Chirarke, and I think I will be bringing this meeting to a close in about 10 minutes. Senator?
Chair, maybe Governor, on the issue of interdiction and administration of administrative action, or if maybe let's say payroll manager is interdicted for 1 year or 6 months, one, how many officers you have interdicted, and then number two, what is their fate when they resume? Because maybe they were the payroll manager, they were in charge of human resource. What happens when they come back after 6 months interdiction or so many months? Give us a picture, because there must be a reason as to why they were interdicted. And then if they created that mess with the payroll, what becomes of it if they come back to the same department? So how many officers were interdicted, and what is the fate of these interdictees? Because I know the process of firing somebody is always complicated because of the labor process and what have you. Now that you are waiting for the other criminal accountability mechanisms to be done, what is the fate of these officers who have been interdicted that created a mess with the payroll? Chair, I yield back the mic.
My last question, maybe.
Okay, Senator Chair.
Last question. Governor, you're saying that your government is employing, and you know in the certificate, page 6, the auditor has made a finding that there's breach of law in failure to observe ethnic balance and staff composition. And this is a pet subject for Senator Cherargei, that when a county is employing, then we need the face of Kenya. So are you mitigating on this finding to make sure that Nandi County staff then has the face of Kenya?
Okay, as you respond, there was a number we had asked for, which perhaps does not even need to be submitted in future. You have just closed your financial year. I think your officers could have a picture on how much have you spent on compensation of employees in 25-26 compared with 24-25. Just a rough estimate. You can look up the numbers as the governor responds to the other questions, because we want to see the impact, whether it's translating into financial benefits, or we are just going around, musical chairs. Governor.
So my team will give me the figure there, but in terms of those who are interdicted, the procedure is that once somebody is implicated and that the matter has been taken up by the investigative authorities, to provide the affected or the culprit is interdicted, until that process is clear and the person has been cleared, he will remain interdicted. So it's a human resource process. It remains interdicted until when cleared. If they are not cleared, then the consequences of termination, dismissal, even possible further criminal, processes against them then continue. So for us, those who are interdicted and those officers who are central to this serious crisis, are under investigation. For the Public Service Board, this was happening under the previous Public Service Board. So their term ended, but they are still subject of investigation by EACC, and I'm sure they are part, a number of those members of the Public Service Board are actually subject of those criminal investigations that are ongoing. So really, any of the officers who are involved are currently facing those processes and the accountability processes in through ESCC and DCI and the others.
So that indicts the County Public Service Board. Do you have an audit committee currently?
Yes, we do.
Because in this report, there were issues with regards to internal audit. And because if you had a functional audit committee, internal audit processes, then some of those issues could be flagged early. You don't have to wait, to resolve 1,800 people. So, but you didn't come along with the chair of audit committee.
So he had been invited, he was not able to come.
But there's a substantive
yes,
audit committee.
And
there's an internal auditor.
Yes.
Have they done the internal audit charter?
Yes, they have.
Okay, so Auditor General, you'll test that when you go to the ground. Now, members, there are many issues on HR. I don't know whether they got the numbers. If you haven't gotten the numbers, then we might want to get those numbers at our next meeting or at the next substantive audit. We have not addressed ourselves to the issues of projects because we spend too much time on financial reports, which we have come to a conclusion that there are serious misstatements and inaccuracies. There are projects in this report.
Chair, maybe before we move to projects, what about this payment of salaries outside human resource integrated system? It's a substantive material figure, 155,541,525 million. That is number 5 on page 7. And then on projects, because I know you had agreed because of another meeting you have for tomorrow's entities, if the committee will find it magnanimous, we can...
So is it possible that I propose we end it here and maybe give the governor opportunity to appear to another time to look at ROR and the
projects? There are so many issues that are before us.
So, Chair, can I request that if we have to end it with number 5 on salaries outside human resource integrated system, then if the committee, because the people of Nandi really want to know how projects are, their status, when are they going to be completed, whether they have been completed, and also I would be very keen on receiver of revenue because I know the revenue potential of Nandi should be 1.4 billion as per the CRA. Would really want to know how the 18 revenue streams that are in Nandi are doing. So, Chair, maybe if committee finds it, we can look at this human resource because it's a very serious issue in the projects.
I think I take your proposal. Let's look at the payment of salaries outside HRIS, and then we'll take a view on the remaining issues on whether to reinvite the governor or whether we go to Nandi or whether to push the matters to the next audit cycle. But whatever the case, owing to the serious issues of misstatement and inaccuracies in financial statements, it would be important that we have another session with the governor so that those numbers that were not explained to the auditor and the numbers that have not been substantiated in this meeting, we can get a firm grip on them. So, Auditor General, read your finding under payment of salaries outside HRIS.
Thank you, Chair. Payment of salaries outside human resource integrated system. The statement of financial performance reflects employee cost amount of Kenya shillings 3,372,701,751 Kenya shillings as disclosed in note 9 to the financial statements. However, review of records revealed that the county executive uses both HRIS and manual Excel sheet in processing of payroll. The total employee cost paid outside HRIS was Kenya shillings 155,541,525 Kenya shillings, made up of manual payroll of Kenya shillings 85,202,776 Kenya shillings and casual payroll of Kenya shillings 70,338,749 Kenya shillings. This was contrary to section 1.5.1 of the Treasury Guidelines through the Financial Accounting Recording and Reporting Manual, which requires that each county government department is responsible for populating the IPPD with the information contained in these documents, issuing each appointee with a unique payroll number from the system and providing the appointee with a letter of appointment. In the circumstances, management was in breach of the law. Thank you, Chair.
Governor, your response and the page number.
The employees who were paid outside...
Page number for avoidance of doubt?
Page 16.
Okay, proceed.
Employees who are paid outside the HRIS Kenya system are those who are still awaiting personal numbers to be processed since the request has been made and forwarded to the Directorate of Personnel Management, DPSM. Immediately the payroll numbers are received, they are moved from manual payroll to the Human Resource Information System, payroll system. According to the circular of the circular dated 20th of December 2019, the Ministry of Public Service in January 2020 rolled out a new system to facilitate in allocation and activation of payroll numbers, which delayed the allocation of these numbers. It is noted that as at 30th of June 2025, the staff on the manual payroll had not been incorporated into the system, and therefore the management is working towards achieving full transition of the staff to the HRIS system and ensure that all payroll data is managed through the system and adhere to the guidelines of the public service. The county payroll unit has forwarded requests for processing of the payroll numbers for all the staff who were being paid outside the payroll system, outside the payroll, to the Directorate of Personnel Management. Thank you, Chair.
So you make reference to Annexure 10. In Annexure 10, if you look at your fourth paragraph, which starts with kindly find attached.
Yes.
What does it read?
Kindly find attached the list of the newly recruited officers for your action.
Do we have visibility on the number of officers involved and whether they make up the 155 million? In the evidence before us, because that is what you're supposed to prove. If it's 155 million without personal numbers, I thought the easier thing would have been to attach that letter that you had sent to the principal secretary, the listing, and then we see if they all account for 155 million, we can mark it as work in progress. Otherwise, what we have now is a story.
I agree, Chair. We could provide at least that should have. We thought that the letter would suffice, but we can provide.
But you can see the letter refers to something else that is more substantive.
Yeah.
It's a list that is the substance here.
Yeah.
But there's also a manual payroll of 85 million and a casual payroll of 70 million. In your response, you have not distinguished the two. Why you have a manual payroll and a casual payroll and,
And Chair, in addition, the number of staff that
make up either
manual payroll of 85,202,776 and casual payroll, which is 70,338,749. And we have seen counties when they pay casual, sometimes they say for municipalities and they give how they pay, the ID number, their job group and the amount they pay, so that we dissuade the issue of ghost workers or workers that are not supposed to be appearing, of 155,541,525. And it, in fact, in the observation, there is a manual Excel sheet which the OAG extracted this information. So I expected the county to provide that for easy tracking and one of this 155, 541, 525. On this 85,202,776 for the manual payroll and casual rep payroll of 70,338,749, so that it comes up to governor to 155,541,525. So if there is a manual Excel sheet that gives total to this, it would have been easy to resolve this audit query. So, Governor, where is the manual Excel sheet?
I mean, it's not small money. It's about
Yes.
13 million a month,
Yes.
isn't it? 13. It's about 13 million a month. So it's not pocket change. It's quite significant. And I thought to account for this, it would have been just easy to say these are the people we have on the manual payroll. These are the people we have on the casual payroll. This is the total amount, and then you give us the story about the mitigating circumstances. Failure to which we could easily come to the conclusion that you are pocketing 12 million a month on unaccounted for employees. You see, you are doing great things up there, trying to rationalize your numbers, but then down here, you are still having control issues, which then make a mockery of your rationalization efforts.
Chair, our understanding was that the audit query here was, the reason why we have these figures outside the system, because the list of the casual payroll and the manual payroll was actually shared with the auditors. I mean, it's how they generated these figures is from the information and the documents that we gave. So our understanding was that the query was really to explain why they were not in the HRIS as opposed to the exact details, but it's something that we can actually provide.
Governor, let's be clear. The auditor has their time for audit, and it's statutory. I think, did we change the law so that it starts earlier than September?
Yes, there's a Treasury circular that requires that financial statements be submitted by 31st August so that we start on 1st September.
1st of September. So from 1st of September to 31st of December, it is a time for the auditor to do the audit. After that, the Constitution requires them to bring the reports to Parliament. So now it is to the satisfaction of Parliament, not the satisfaction of the Auditor General. So I think this is a matter that we cannot resolve on the face of it. And members, since we have so many issues that still require further explanation, I think today we have stretched quite a bit. In our next engagement, we'll make sure we start much earlier so that we don't leave any matter hanging.
Maybe on the 155 million, 541,525, I thought it is important that the governor brings the evidence that totals to this.
Yes.
So that the fact that the rationalization of 3.3 billion, so that we don't go back to where individuals who are not supposed to be on payroll, like ghost workers or people who do not work, or the cleanup. Governor, because you had indicated you did cleanup of the payroll system, but the fact that in the payroll there is still people who are paid through manually, and we know manual is prone to abuse. So can you dissuade us? And I think, Chair, as you rule on this matter of we hold it there, I think the issue of 155 million should and must be addressed and accounted for the way they have done in other aspects where we needed that has not been resolved. And I think, Chair, if you look even at prior year matters, sorry for taking back, this matter still recurs in the previous financial years that has been captured. And Governor, we did advise the OAG to be capturing prior year matters so that it is easy to track. So, Chair, I yield back, Chair, on because I know the meeting will be suspended shortly, is if on the issue of projects, I tend to agree with you that you can come to Nandi. We'll welcome you warmly. We see most of these projects so that when we are querying the projects, we are on site. I think it is easier that way rather than sitting here in the committee. So please feel welcome so that we can see some of these projects. And I can assure you, after doing a good job, you will not miss Mursik after the entire process. Chair, I yield.
Thank you. You brought me to where I wanted us to be, to discuss and to give directions that the unresolved prior year matters that are listed as Appendix 1 in this auditor's report, they also require your response. Because, Auditor, did we get responses on Appendix 1 from the entity?
Chairman, we did not get a response. The Office of the Auditor General wrote to the entity on the 22nd of January 2026, and the letter was received. That letter was documenting a total of 57 recommendations which this committee had made. Again, we did a reminder on the 23rd of March 2026, and the letter was received. That letter was copied to the County Assembly, to the CEC Finance, and to the Office of the County Governor. But, Great Chairman, we don't have a response to those issues. Thank you.
Okay, Governor, you've had correspondence direct from the Auditor General on the basis of resolutions of the Senate, not once but twice, but there's been no response. Are you aware of those correspondences?
Yes, I am, Chair. And we...
What is, because there are timelines. If the matters remain unresponded to, they'll keep populating your report. Because nothing will disappear from this report until and unless there is a resolution through the Office of the Auditor General and the Senate. Auditor, when did you require them to, what timelines did you give them to respond?
And we had given them 3 days from the date of that letter.
Now, Governor, you need to make sure that a response is provided, and if the auditor had given you 3 days then I think we might, we don't want to extend the time, but when we give you the notice for our next meeting, we hope, we will also be directing that you file your responses on prior year matters. Yeah, I think that's so that we don't set fresh timelines. Already the auditor gave you timelines which have lapsed. So prior to our next meeting, you will also provide a detailed response on the very many issues that are listed here. On HR, there were about 14 issues, almost 14 issues in just one department. There were things that the people of Nandi might wonder how they disappeared from the Senate. So, for example, the County Aggregation and Industrial Park, it's a prior year matter, but it's also in the current year. Ineligible expenditure under Kenya Informal Settlement Improvement Project. I think there's KISIP queried and KDSP had also been queried. Then there were all these projects that you're doing, which made a lot of sense from agricultural value chain and value addition perspective, but there were delays in completion. For example, Avocado Aggregation Center, the Nandi Cooperative Creameries in Kabiet. I think there was a coffee mill project under the KDSP, and then there was delayed operationalization of Nandi County Textile and Apparel Unit. They sound, thematically, they sound like very, very good projects, but good projects poorly delivered is a bad project. So we will need to get your detailed responses on this, even though they were not part of the substantive issues in here. There were also hospitals. Kapsengere has been queried in this report. Mother and Child Hospital. There's also the issue of the governor's office building, where you have bought furniture before completing the building, like buying airtime before you get the phone. So we will need to find out what was the wisdom of doing that and whether it is prudence. Then I think those are some of the things that we should ensure do not get lost until they are completed, until they are delivered, and until there is value for money. With that, members, unless there is any other matter you want us to deal with.
I think in the previous one on unconfirmed purchase of office furniture and general equipment, in the prior year, it was not unconfirmed. In this year, it was confirmed purchase, but the justification to buy it before the governor's headquarters is complete, because we want the next governor, be it me, to have an office to work from. And you know, I'm used to how efficient offices are in Nairobi, so I want the best office in Kapsabet. Although I've seen my brother governor has been changing colors of paint, but I want him to fast track. I've seen he has put capros, fencing, but it needs to be finished before the next general election, which is less than 1 year. Yes.
You sound like you are an interested party in this particular subject.
Of course I should be, because I'm the protector of devolution, and one way is to have a functional, convenient, working office, even for a governor. If he finishes now, before he leaves office, so be it, so that that efficiency can be improved for service delivery.
I think members, these are things that might require us to have boots on the ground. It would be nice for us to go just have a look, and I think I'm convinced that maybe our next interaction with the governor probably should not be Nairobi. It should be out there in Nandi, so that we go around these projects, all these agricultural projects, and see whether what is on paper is the same as what is on the ground. I think with that, we will, time will not allow us to go further. I will ask the governor if he has any matters in closing before we also make our closing remarks.
Chair, I think I would just join my senator in saying, I think, you know, visiting the ground and coming to see some of these projects makes a lot of sense. Again, a lot of progress has happened. A lot of those projects have actually been operationalized. I want to confirm to my senator, we should have declared conflict of interest on that matter a little bit, or interest that he hopes that he can be the next tenant in the county headquarters, that I will have used it at least for
Governor,
6 months.
Ambition cannot be conflict. It would only be conflicted if it was a service provider. Yeah, but so, proceed.
Yeah, I want to confirm to him that I hope that I will also be able to use that office. Actually, part of the office is being used now. I am sure in another 1 month or so I should be, and if you find favor in visiting our county, basically that is where we will receive you. But Chair, I have noted all the issues that have come up in this engagement, and I confirm, and I want to commit to address and abide by the directions this committee will provide. Thank you, Chair.
In the interest of time, we will donate our time to Senator Chirarge for the closing remarks.
Chair, maybe just in closing is that those issues that we have flagged, I hope it can be addressed once and for all, so that my prayer, Chair, has been always every entity or every governor in office should ensure that they finish what they are doing, so that when the next session comes, it will be easy to manage. And Governor, you have to agree with me that at least everybody should finish what they are doing, so that when another regime comes, we don't want to see what you are trying to allude yesterday in Kabuliot in Moiben sub-county. Secondly, Chair, you have noted in terms of materiality, this, I have been tallying the amount that remain variant and unresolved. It comes to almost over 1.6 billion. These issues, and I know we would have gone even to the legal expenditure, contingent liabilities, the issue of pending bills, the issue of retention money, the issue of variance in employees and what have you. We really want to ensure that this 1.6 billion plus will be resolved, and ensure that the people of Nandi can pinpoint. On the issue of projects, I agree that when we visit, Chair, we can create a circuit, because like Kapsengera is next to Vihiga and Kisumu. We can do within Kapsabet town, just to sample a view, even defined, if we can do it with Wazingishu, Chepteroi sub-county, when we are doing the Wazingishu, because that is near, Chair, and a number of other projects. It would be very important, including the one we have alluded to, Kapsabet County Referral Hospital. We were with the Committee of Health, and then, but we were looking at the services that is provided by county. But it's important that we can visit some of these projects. So I believe, Chair, that let us go on the ground and look at some of these projects, be it the ECD, be it the health sector, Chair, and many others. So, Chair, I really want to see these things complete. And Governor, all these multi-year, this is your last year in office, these multi-year projects should and must be completed so that we begin in a clean slate and give value for our people. If, personally, I don't have a problem, Chair, if Governor ensures that Chepterwe Sub-County Hospital Phase 3 is completed and functional, we say amen. If other projects within the county, Kapsengera and the rest, even I used to see is one, the Kobujai, where is local trading center, be completed and functional and people can access services. We want that to be completed. So, Chair, mine is just to say that and hope to see you in Nandi. I know you are our neighbor. I hope to see you in Nandi. And if we can do most of these things, our people in Nandi will appreciate. And to welcome my brother Mo Fire. I know he has been fidgeting. You know, the reason today he has not been speaking is what he has been observing over the weekend. But I want to assure him and to assure Professor Kindiki we are with him until end time. So maybe Governor has a different opinion, but we will cross that bridge when we reach there. Chair, with those many remarks, allow me to rest there and yield back them.
Thank you, Senator. I think just to conclude it, we were not able to deal with issues on the receiver of revenue, even though the brief we got earlier from the Parliamentary Budget Office also shows that there is a problem there. When you look at certain revenue streams, like land rates are reducing, parking fees is reducing significantly, market fees, property rent, such that the 771 million that Nandi collected, were it not for hospital fees of 385 million, then perhaps the performance of Nandi from a revenue perspective would be described to be much below average. But we shall have this discussion when we come down to Nandi and also deal with the other projects. And I hope by that time, the issues of financial reporting, misrepresentation and misstatement, we hope that that will not recur in the audit cycle that is beginning now. For the professionals, please, please take your jobs a bit seriously, because the politicians, the governors will come and go. It's just the other day that Senator Sang became Governor Sang, and it's now 10 years. But as a professional, you should make sure that you offer a service that can transcend the political leadership. And you can only do that if you demonstrate utmost competence. I think keeping books in a county government, once you've got the CPA certification, should not be a challenge. And I'm looking forward to a future where we will be crying when you get a qualified opinion, you feel like hanging yourself. Because that's how it is in the private sector. You're supposed to have an unqualified opinion. A qualified opinion is not a badge of honor. It is an indicator that as a professional, you are falling short in certain areas. So in as much as we will push the governors as the CEOs, we will not hesitate to assign professional and individual culpability and responsibility to the professionals who fail to measure up to the standards. With that, we come to the end of today's session. This meeting is adjourned. We meet tomorrow at 9.
At 9, okay. 9 is okay.
Yeah.